survey yesterday. A quote that we pulled from that here at Bloomberg, a record net 53% of fund managers surveyed by Bank of America said corporate balance sheets are over-leveraged, and 61% of respondents want companies to focus on bolstering their balance sheets. That's the highest share since June of 2009. And that is where the focus is right now. Protect your ratings, bolster your balance sheet, meet your coupons.
Have enough cash to keep going. And there's a real question about how many companies are going to be unable to keep going without some sort of government assistance. And you're certainly seeing that fear play out in credit markets. Some of the hardest hit names are names you'd expect. Expedia, for example, anything having to do with travel, falling off a cliff, anything having to do with oil as oil prices tumbled to 2003 levels, also falling off a cliff. But there's a broader concern here, liquidity. Do people have enough cash to keep going?
That's the downside risk. Does the deleveraging begin? Do the defaults start to come up? And do we come out of this on the other end of a global health crisis looking okay or in pretty bad shape? Joining us on the phone, I'm pleased to say, is Jane Foley, Rabobank Head of FX Strategy. She joins us out of London. Jane, fantastic to have you with us on the programme. It feels that way, doesn't it? The credit is firmly in the driving seat. There is a huge, huge demand for US dollars, and it is about hunkering down and getting through the next couple of months. Your view on all of that?
Well, I think that's exactly it, and I think these trends have been obvious for a while, but particularly over the last week. And we can see this very much in the money market, those blowing out of spreads on cross-country basis swaps, etc., really pushing out. Now, the Fed, of course, yesterday putting back those really important lines of the commercial paper funding facility, for instance. Haven't seen that since 2008. Now, that will help, but if you think about the need for dollars, I mean, if you go to a company or a country rather like India, you think about how much that's grown over the last 10 years since the global financial crisis, you begin to get an idea about how much dollars are needed. The demographics have changed hugely when it comes to dollar demand. The transactional demand for dollars really has exploded, and that, I think, is what we're beginning to see now. When you come to any degree of crisis, people need dollars. They're looking at the credit lines that they have. They're looking to see whether or not they can get those dollars in place. And that process is still going on. And it may not be calmed until the concerns about coronavirus begin to get contained. And that may not happen until we see a reduction in mortality rates in Europe and in the US, until we've seen a peak and those sorts of numbers.
Yeah, Jane, we are seeing the dollar index rip higher to the highest levels now since 2017. A lot of people concerned about the implications on emerging markets, on a lot of countries, including, for example, Australia. There's a question, though, what do all these companies and people need these dollars for? What are they buying with it? Are they just sticking it in proverbial mattresses for a rainy day?
There might be some of that. There might be some companies that know that they're going to reach or going through hard times in the next couple of months. That goes without saying. I think we all have come to recognise that over the last few weeks or so. Customers not going into the shops, customers potentially not buying. Those companies need cash to carry on. So those companies that might have some cash, again, looking at the credit lines in place with various banks that they may not be using, trying to make use of those credit, trying to get the cash to really get them across these tough times. And that's, of course, where the fiscal response becomes really important too. This is why talk of helicopter money for firms, handouts from various governments to firms, cheap loans, guarantees of loans, that's when that all comes to place, because that could really help with this type of demand. So a lot of it is rainy day money, but it may not all be. I mean, you think about how many invoices across the world are written in dollars, and that's particularly true in emerging markets. I think in the UK, the Bank of England says something like 30% of all invoices in the UK are in dollars, and sterling is a reserve currency. You move to a country in emerging markets where there isn't a reserve currency there, they're going to use dollars for invoicing. You think about all of the commodities still invoiced in US dollars, still denominated in US dollars. So the demand for dollars is huge. That has been the case really ever since there has been this growth in demand for a growth in the actual growth in emerging market economies, and that has really pushed up the transactional demand for dollars. So there's rainy day funds, yes, but there's still a huge transactional need for dollars as well.
Jen, you mentioned sterling. We're about to see a break at 119. There it is on the screen. 118.99, just very briefly. The flash crash lows of 2016, 118.41, looking at the Bloomberg terminal. Do you expect to test those levels? Do levels matter in an environment like this, Jane?
It depends who you're talking to. Now, they perhaps will matter a little bit less to the UK government, the Bank of England. We're talking about a country with a low inflationary backdrop. At this point in time, it's not the most important consideration for the Bank of England. But if you go into the emerging market world, they need a lot of dollars. And if you see their currencies crashing against the US dollar, that's going to make it very difficult. You look at a country that imports a lot of oil. You look at India. You look at the way their currency is going. Importing oil is going to become extremely expensive, extremely inflationary. So the pressures are going to be much worse for emerging market countries and emerging market companies and the central bank. In the UK, it will be a bit inflationary. It's not nice for any central bank to see a lot of volatility in the currency, but it's probably not their primary concern at the moment.
John, I love that you asked that. Do levels matter? I think that that's actually a really key question across the board. What exactly are we seeing? Are we seeing people just failing to price and understand what to even price? Are we seeing the liquidation of funds that are tied to both bonds and stocks and are trying to model this out and have been trying to model this out and the models are broken, right? I mean, what's sort of the technical underpinning when you see this incredible volatility? Do levels matter, I think, is a really key question we can keep asking.
Yeah, Jane, especially if this story's been driven by just a lack of dollars, just a massive, massive freeze in various areas of the market. I'm not sure the technicals of a single currency pair really count for much at the moment, do they?
Well, perhaps not. I mean, again, you go to Australia. I mean, that's an interesting one because they have the central bank about to make another policy announcement tomorrow. You look at the value of their currency and it's been falling through the floor. Is that going to stop them doing more monetary easing tomorrow? No, it's not. It's not right now their primary concern. But it will be a huge concern to a lot of different companies across the emerging market. They will be bearing the cost of that. There will be a lot of inflation. So whilst the levels are very difficult to get a handle on now, there will be a cost to a lot of people around the world from this.
Jane, great to catch up with you. Jane Foley there, Rabobank Head of FX Strategy. The pound right now at around 119, a break of 119 for the first time in a long time. 118.93 is where cable trades at the moment. Much more still to come on the global market. It's time now for the Bloomberg NJIT STEM report. New Jersey Institute of Technology are ranked #1 in the nation for student upward economic mobility. Learn more at njit.edu. Here's Bob Moon.
Jonathan, Lisa, good morning. Here's what's making news in science, technology, engineering, and math. After the Washington Post reported the U.S. government might use smartphone data to fight the coronavirus outbreak, Google says it's still assessing the best way to help, and for now it's not sharing what it calls aggregate anonymized location data. Health and government officials say such information could be useful in tracking whether people are keeping at safe distances or in mapping the spread of the infection. The Washington Post reported the U.S. government has been in talks with Google, Facebook, and other tech companies on using smartphone data. Google has detailed information on the movement of billions of people who use its digital maps and Android devices, which has been identified as a useful asset in possibly tracking the virus. Google says it has no plans to share or combine data with the industry, but is not completely ruling out tapping information in limited ways in the future. Facebook said an automated filter for combating spam on the social network was beset by a bug that mistakenly removed legitimate news stories and other posts. Several users complained on social media that their posts were taken down and replaced by a notice that read, "This post goes against our community standards on spam." Facebook acknowledged in a Twitter post that it was a bug and said all content that was incorrectly removed had been restored, including posts on all topics, not just those related to COVID-19. And that's the Bloomberg NJIT STEM report. Jonathan, Lisa?
Thank you so much, Bob. Right now, let's get the news. Michael Barr. Michael.
Thank you very much, Lisa. Thank you, John. The wheels are in motion on a huge stimulus package to offset the fallout from COVID-19. President Trump is pushing for more than $1 trillion in spending to blunt the economic fallout from the virus. Vermont Senator Bernie Sanders says the federal government should provide each American household with a monthly stipend to take care of expenses during the coronavirus crisis.
We need to provide a direct emergency $2,000 cash payment to every household in America every month for the duration of the crisis to provide them with the assistance they need to pay their bills and take care of their families.
In the Democratic primary, former Vice President Joe Biden extended his lead over Senator Sanders. Biden won big last night in Florida, Illinois, and Arizona as he inches closer to the nomination. Speaking from his home in Delaware, the former vice president mostly focused on the coronavirus.
It's in moments like these that we realize we need to put politics aside and work together as Americans. The coronavirus doesn't care if you're a Democrat or Republican. It will not discriminate based on national origin, race, gender, or your zip code. It will touch people in positions of power, as well as the most vulnerable people in our society. We're all in this together.
The head of the Democratic National Committee and several voting rights groups are calling on states to mail ballots to all voters to keep remaining primaries running as the coronavirus pandemic is keeping millions of Americans at home. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts from more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
Michael Barr, thank you, sir. Thank you very much. We have had a radical reset of expectations in not even a month. I said at the start of the show, we've gone from a stock market all-time high on February 19th to a little under a month talking about zero rates, QE, and helicopter money in America. And the shift in the attitude and the feelings and behaviour sentiment of fund managers has been just as radical as well. We mentioned, Lisa, that Bank of America fund manager survey a few times on this programme in the last 24 hours. Biggest drop in growth expectations ever, lowest EPS expectations since October 08, fourth largest monthly jump in cash ever, and the biggest collapse in equity allocation ever, and it has happened so fast, so quickly.
This is the definition of exogenous shock, right? I mean, everyone's focused on a health issue that cannot be quantified, and people are not healthcare experts necessarily in the markets, and they're trying to gauge that. This has been violent, and the question that I have is, how bad has the fallout been? Have we pushed out some of the leverage in the system? Are we getting closer to that, or are we just on the tip of the iceberg?
Yeah, there were two big questions: scope, severity. Now there's three: longevity. And the longevity of this whole episode is what really worries people at the moment. Just how much longer can these SMEs get through this without the help from Washington, D.C., even with the help from Washington, D.C.? How easy will it be to get through?
And even when we do get through it, what will our central banks look like? What will our government budgets look like? What will debt yields look like?
We can talk about that a little bit later on the programme. From New York this morning, good morning. Alongside Lisa Abramowitz, I'm Jonathan Ferro. Tom Keane on vacation. I bet you wish you were on vacation too at the moment. Equities lower on a Spider S&P 500 ETF. We're down by 6%.
Sports Report. I'm Michael Barr. The NCAA made more than $1 billion last year, almost $867 million from the men's Division I basketball tournament, and most of that from huge TV rights deals with CBS and Turner. However, the coronavirus not only wiped out the games, but it will create some unexpected red ink on the NCAA's balance sheet this year. Exactly how much is to be determined. The temporary halt to the U.S. sports calendar has left gambling services scrambling to find something for clients to bet on. DraftKings has heavily promoted sports like Mexican soccer and UFC, and the company did its first ever fantasy politics offering, such as whether Bernie Sanders would say millionaire or billionaire first in the debate. DraftKings is also running its largest ever fantasy tournament around esports, competitive video gaming, one that carries a $60,000 prize. And that is a Bloomberg Business of Sports report. I'm Michael Barr.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Global news 24 hours a day, on air and at TikTok on Twitter. Powered by more than 2,700 journalists and analysts in over 120 countries. This is Bloomberg Radio. Now, a global news update.
Even with the Senate stalled on the House-passed bill to help American families struggling in the coronavirus crisis, President Trump and Treasury Secretary Mnuchin want Congress to pass a $1 trillion economic stimulus.
Mnuchin says the package is diverse.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Combination of loans. This is a combination of direct checks to individuals. This is a combination of creating liquidity for small businesses.
Senate Minority Leader Chuck Schumer says this should be job number one.
The aid has to be workers first if we're going to help these industries.
Linda Kenyon, Washington.
Joe Biden may now have an insurmountable delegate lead over Bernie Sanders after sweeping the Illinois, Florida, and Arizona primaries. Biden reaching out directly to Sanders supporters.
We share a common vision for the need to provide affordable health care for all Americans, reduce income inequity that has risen so drastically, to tackling the existential threat of our time, climate change.
Stock futures are back down after yesterday's Wall Street gains. I'm Michael Toscano.
Why all the top-tier experts? Because business is not a magic trick.
Give us a sense of the economic backdrop.
Bloomberg Markets.
Which financial records are these?
Weekday mornings at 10 Eastern on Bloomberg Radio. Bloomberg, the world is listening. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures on the decline after, along with European stocks, retracing moves from a day earlier, while bonds are slumping as traders weigh the impact of fiscal and monetary stimulus to counter the effect of the coronavirus. Yields in European bonds soared, with Italy's jumping more than 60 basis points at one point. Oil is dropping to a 17-year low. And we are watching U.S. stock index futures. They hit their lower trading curves this morning. S&P futures now down 92 points, down 3.7%. Dow futures down 821, and NASDAQ futures are down 328. The DAX in Germany is down 5%. 10-year Treasury down 730 seconds, yield 1.10%, and the yield on the 2-year at 0.44%. NYMEX crude oil is down 6.1% at $1.64 to $25.31 a barrel. COMEX gold is down 1.4% on $21 at $15.0410 an ounce. The euro 1.0980 against the dollar. British pound 1.1883, and the yen is at 107.44. And that's a Bloomberg Business Flash. John and Lisa.
Karen, thank you very much. Some areas of the market that I want to keep shining a light on. What is happening in Italy? The front end of the yield curve really selling off quite aggressively, up by 48 basis points on a 2-year. Yields off the highs of the session, but that is a major move and a big concern that the ECB won't be there to back up spreads. ECB President Christine Lagarde in Thursday's news conference basically saying it wasn't their job, and then we spent the next week walking those comments back. Right now, very difficult to get the toothpaste back into the tube, isn't it? That's the challenge of the European Central Bank at the moment. So that's Italy. In the foreign exchange market, we have gone through some really big levels on some of these major currency pairs, including cable. The pound against the US dollar, 118.95. So that is a very clean break now of 120. A clean break of 119. And in sight, the flash crash lows of 2016. You will remember that in the Asian session, October 2016, 118.41. That was your low going back to 2016. And those lows right now they're in sight, Lisa.
Yeah, the volatility. I mean, remember back then, people were saying that that sterling was acting like an emerging market currency, right? We're back to that, but without Brexit, just because everything's acting like an emerging market currency. The volatility is out of control.
I think some people would still describe sterling as an emerging market currency. It is incredibly volatile. Let's continue the conversation about what is happening in the equity market. Futures limit down. They've been that way since 1 a.m. Eastern time. The S&P 500 Spider ETF down around about 6% over the last couple of hours. To weigh in on everything, I'm pleased to say Marvin Lowe joins us, State Street Senior Global Macro Strategist. Marvin, I'll bring you a question that I know many of our listeners are thinking about because many of them have written in about it. Will the deleveraging start? And if it does start, will it stop even after the health crisis fades?
You know what? I think the challenge right now for all investors is really to try to get through just a number of significant events at the same time. The market functioning from a liquidity perspective is very tapped. Obviously growth global and at the EPS corporate level is being challenged by the virus and really the shutdowns of countries. I think we need to get through each one of these first, starting with the liquidity aspects before we can even get to that valuation discussion. Once we can start looking at valuation discussions, certainly there's going to be functioning capital markets that allocate capital appropriately. We've just got so many cross currents right now that it's hard to get to the point of even thinking about that.
Yeah, Marvin, I want to pick up on that. You've been in this business for a long time, and as a macro strategist, what do? You just say, I'm out. I'm done. I mean, where do you even begin? What's your compass for understanding how to even give guidance through this?
Yeah, Lisa, you and I have had some incredible conversations about this. I really do try to take a step back and figure out where I can add value, kind of having sat in a number of seats during this process. Right now, I am ultra focused on the funding issues because I think until you can price some of these liquid markets more efficiently, treasuries in particular, MBS in particular, it's hard to get a value there. So just really understanding everything the Fed is doing and whether or not we're taking out that risk premium that's required because there are potentially unfunctioning markets is where I'm focusing time on. But you're right, from a valuation perspective, a forward PE means nothing when we have no idea what the E is, and we're kind of in that type of environment now.
Yeah, it's been a massive struggle, and we mentioned earlier on the program, I'm not sure the previous levels even really matter in a moment like the one we're in right now. Marvin, you mentioned some of the areas of the market that have been freezing up and some of the funding issues. The Federal Reserve out with a range of tools in the last 24 hours. Can you just walk us through in very simple terms what they've actually done and whether it's helping or not?
Yeah, certainly the CP program and the primary dealer program was new overnight. Just the next in a series of I think targeted tools that the Fed is trying to do. They were tools that were used back in the crisis. One is to kind of fund. One is to kind of free up a little bit of the stresses in the CP market. The Fed will effectively be a buyer of commercial paper through an SPV. The second is to, I think, try to free up some of the repo concerns. But underlying all of this, I actually think that there's a focus on helping corporate bonds, which are really stressed. And I know both of you follow that market really, really closely. One of the concerns with the corporate bond market, if you're a corporate bond buyer, is if you can't refinance in the CP market, all of a sudden you've got an issuer that has a potential funding/default issue. If the Fed takes that issue off the table, then we could take a step back and look at some of the fundamentals. Challenges in market structure are that primary dealers aren't as active as they were before. So you've got kind of this negative feedback loop occurring within potential equity market volatility going into the corporate market. If the incentive is there to ultimately arbitrage through the primary dealer facility, borrowing at effectively a discount rate, which is 25 basis points, and possibly buying corporate bonds, maybe you can drive demand that's not there. Neither program has started yet. What we've seen with LIBOR with the repo program, is that it does take time for all of this to make its way through the system. We're just hoping for a couple of days of calm so we can actually get to the point of thinking about things like this.
I think we'd all love a couple of days of calm. Marvin, great to catch up with you. Marvin Lowe there, State Street senior global macro strategist, with his thoughts on global markets and the Fed. A must-read in the Financial Times that's come out in the last hour. Ben Bernanke and Janet Yellen writing an op-ed piece and bringing up buying corporate debt and talking about one of the suggestions made by Boston Fed President Eric Rosengren on perhaps going to the US government and asking if they can get the permission to go out there and buy corporate credit in the same way that it's done at the ECB and elsewhere. That coming out in the Financial Times. Well worth a read and coming out in the last hour.
Interesting to see as the Federal Reserve tips its toe even further into taking on credit risk, whether it's through the commercial paper facility or this other facility, the primary dealer purchase facility, where they're going to actually accept some credit in order to give loans to banks. Just raises a whole host of questions for the central bank.
Doesn't it just? Every crisis pushing them to do just a little bit more.
Or a lot bit more.
Little bit more. Equity futures limit down. The S&P 500 Spider ETF down by 5.5% off session lows from New York this morning. Good morning to you all. This is Bloomberg.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized...
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Leave it to the New York Times to make the most intelligent pop music podcast out there.
Welcome to the New York Times Popcast.
On the Popcast, the Times music staff gets together for a weekly roundtable on the hottest topics in popular music. From award show autopsies and reactions to new releases to difficult-to-process scandals and emerging themes in the music landscape, hear distinguished music critics share their perspectives on the latest music news, songs, albums, and artists of note on the New York Times Popcast. Search and favorite Popcast to join the conversation.
NYSE SIPC.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
This is a Bloomberg Money Minute. JetBlue is out with an updated look at its situation amid the coronavirus outbreak, which has slammed global travel demand. The company says it's reducing its capacity with a reduction of at least 40% in April and May, and JetBlue says it expects substantial cuts in June and July. The carrier also says it will ground some of its airplanes. It's already taking steps to cut pay for its officers. It's offering voluntary time off, and it's renegotiating its business agreements. Stock futures slid this morning, hitting their limit down to prevent further losses as investors assess the latest coronavirus-related headlines. One portfolio manager said traders are in an environment where people don't know how to factor in the virus. And oil continued to slide, was almost at $25 a barrel. Stocks rallied yesterday with the S&P up 6% on news that the White House is moving toward a big fiscal stimulus package worth over $1 trillion. Gina Cervetti, Bloomberg Radio.
Two people who are as fascinated by the markets as you are.
What's your sense of the competitive landscape in the cloud business?
Lisa Abramowitz.
People were talking about potential regulatory pressure.
And Paul Sweeney.
Are you seeing flows into ESG ETFs?
Bloomberg Markets.
What's your main conversation today with some of these corporate executives?
Weekday mornings at 10 Eastern.
They're spending a lot of money there.
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. We have to get it right the first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
In this cycle, we've dealt with a lot of shocks.
It's important to understand what the Fed can and cannot do.
Finance.
There's no asymmetry left in markets. It truly is a zero-sum game.
We will get slower growth. I mean, let's not get confused about that.
Investment.
Very few investors want to own any energy to begin with.
There's a great deal of uncertainty. People are trying to hide in safe places.
Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz on Bloomberg Radio.
From New York City, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance. Alongside Lisa Abramowitz, I'm Jonathan Farrow. Tom Keene is on vacation. This is a wow market this morning once again. The S&P 500 Spider ETF in early trading is down. It's down hard. It's off session lows, but still negative 5.5%. Equity futures limit down since 1 a.m. Eastern time. We have not traded above that level ever since, but there is a huge move in the commodity market that I want to bring to your attention. A break of $25 on WTI right now on my screen, $24.97, and down a little more than 7 percentage points on the session. A break of 25, Lisa, for the first time since 2002.
It's just been brutal in the oil complex. Dual shocks, right? We've got the slowdown in travel, the slowdown in everything that consumes oil, and so that's going to slow the demand side. And then you have Saudi Arabia and Russia ramping up production to record levels as they try to squeeze the other one out, as they failed to reach some sort of agreement as far as production cutting. I gotta say, there was a story. They're running out of places to store the oil that they're pumping.
That is the story, I think, at this point. There are some technical characteristics of the commodity market that makes it somewhat different to, say, equities. And Goldman Sachs' Jeff Curry does a brilliant job of explaining this to a lot of people. I know he does it with his clients too. Equities are an anticipatory asset class. It's about the hopes and dreams of the future. In the commodity market, with something like energy, you have to clear supply and demand at spot. And if you have storage issues, guess what? That price is going south, and it's going south aggressively. And what needs to happen quickly is that production needs to come offline. So we get into that bite point where finally you breach storage, and then you have to aggressively set the oil prices lower, and then people start to capitulate and say this is ridiculous and scale back production.
But this is so unprecedented, because even if they drop prices to zero, not going to necessarily prompt a material increase in demand just because everyone's quarantined in their homes. No one can fly anywhere. If you go outside, you don't hear any airplanes. Have you noticed that?
Totally agree. But when we talk about storage, if we are getting close to that story, and this isn't my world, but I've seen the same reporting that you have, if we're getting that close to that story, then the people like Russia and Saudi Arabia have to start thinking about capitulating. And in shale, look, what are you going to do? Keep pumping? Is that what's going to happen?
I mean, at a certain point, you can't. What are you going to do? Drink it for breakfast?
24.71 is where we are at WTI crude right now. We'll try and get you up to speed on the commodity market a little bit later in the program. We've been talking about whether levels matter in an environment like the one we're in, whether history is any guide for the environment like the one we're in. This is from RBC's Laurie Calvasina, who said recently in a really, really interesting research note that median and average recession-related drops in the S&P 500 are 24% and 32% respectively. A 32% drop would take the index to 2,300, below its December 2018 low at 2,351. We expect that level to be tested. Really pleased to say that joining us on the phone is Laurie Calvasina, now RBC Capital Markets Head of US Equity Strategy. Laurie, just take it a few steps further for us. What are you looking for?
Well, look, we're telling investors at this point in time we have to really listen to what the market is telling us right now. And the market's been telling us, for about a week now that it's anticipating a recession. The big is it anticipating something worse? Now, that 24% and 32% stat you quoted, those go all the way back to the 1930s. And, of course, the tech bubble was much worse in terms of the drawdown. The financial crisis was much worse in terms of the drawdown. My concern is that if this 2,300 level doesn't hold, the market is going to be telling us it anticipates something more onerous than your typical recession. And, there are sort of a lot of, comments about, how this isn't about the financial crisis. I'm not saying we're heading back there, but there are some similarities to that in terms of what we're seeing in the data.
What are the similarities right now, Laurie? What are you looking at?
Well, to be honest, last week, and I think it was Thursday, I've lost track of all these big down days, but we looked at the big down day, and the big stat was, this is the worst day we've seen since October of 87. And I went back and I looked at the days, and I just ranked the worst days in the S&P, and we actually found we had a lot of similar days that weren't quite as bad, but pretty close back in 2008, really in that fall time period. So we actually figured out that if you go back and you map out the path of the S&P 500 since mid-February, and you look at the day-to-day moves, they match up almost perfectly with what we saw in mid-September of 2008 and early October of 2008. We are basically headed down that same path right now that we saw in the heart of the financial crisis, some of the worst days of trading.
Does that mean that we're creating value, or does that mean that we're heading toward a downturn that perhaps is being underplayed by people who are saying this is just a temporary shock?
Look, I think we have been in the camp where we think there is going to be a really massive shock in 2Q that we'll start to claw out of in 3Q. Now, obviously, those forecasts all have to be reviewed based on incoming developments. But I will tell you what to me this reminds me of is just the spiral of fear, the complete loss of confidence that we saw really back in those really hardy days of the financial crisis. That sentiment breakdown feels very, very similar. Now, I do think that we are in a very different place economically than we were back then. The banking system is in much better shape. So I don't know that all the analogies apply. There are some key differences, but the confidence is what we're really focused on. And we've actually told people we're watching AAII very closely, the gauge of weekly retail investor sentiment. It topped out around 70% if you look at the bearishness back in the financial crisis. It's only around 51% right now on last week's update. So I think we probably need to see that 51% go back to 70% before you can really be comfortable about starting to call a bottom here.
Laurie, back in 2008, it was a financial crisis, and the panic was also prompted by a lot of forced selling and a lack of liquidity at some of the biggest financial institutions. No one is saying right now, who I have spoken to, that financial institutions are anywhere close to this. Most people have been saying this is a health crisis. This could potentially become an economic problem and an economic shock. But financially, we are okay. Talking about that panic, have we shifted over to a point where we are entering a financial crisis with mass liquidations and a sense of just needing cash at all costs?
I don't think so. And, one of the things that we've pointed out this morning that we're watching is if you look at the performance of the most popular stocks and hedge funds, they've actually been holding up pretty well. Now, they have had a rough time this week, so we think we need to watch that to see if that resilience continues, because it hasn't in the last 2 days, frankly. But generally what we're not seeing is a lot of sort of panicked de-risking by hedge funds right now. They're sticking with their favorite stocks. They're holding up a little bit better in this crisis. I think that's a good sign for right now.
I think it's fair to make the argument that we're going to face a 1Q, 2Q earnings crisis. I think that's really fair to make that argument at the moment. And Laurie, there's a big worry about what that means in credit. From the equity side of things right now, do you consider credit and fixed income as an asset class just in the driving seat for what happens in stocks going forward?
I think certainly equity investors are taking their cues from that, and it's something that's contributing to sort of this downward spiral in confidence that we're seeing.
How do we clear that downward spiral in confidence, Laurie? I mentioned on the program a comment that was inspired by Mark Dow, a fund manager, and it's the correlation between risk appetite and price. And we have this very unique world on Wall Street where there is a positive correlation between risk appetite and price. And when prices go up, traditionally risk appetite is better. And when prices goes down, risk appetite is worse. Price isn't going to clear sentiment. You're not going to get to that level where people step in and say, this is a great valuation, I feel good about the world now. What does improve sentiment?
No, I mean, it's funny. I keep hearing clients tell me they don't want to look at 2020 earnings. They want to look at 2021 earnings. Well, how the heck do you know what 2021 earnings are if you can't figure out what 2020 are? I mean, that's the whole valuation riddle right now. I I think, to be honest, we've done some work on this, and to be honest, we stole the chart from our bank's analyst, Gerard Cassidy. But if you just look at Google trend searches on the coronavirus, it's just a proxy for fear and sentiment around the health crisis that's going on. That is absolutely driving S&P 500 price action right now. When that started to ramp up globally, we started to see the S&P 500 come down. And I think, all the reporting you guys are doing in terms of what's going on legislatively, all the news coming out of the White House, that's critical right now. I think one of the similarities we have now between now and the financial crisis, and again, there are different kinds of crises, but back in the financial crisis, there was a sense of anything the Fed did, anything the government did, it wasn't enough. There was a real loss of faith in the ability of institutions to get us out of that crisis. And on the worst days in the market, you're hearing echoes of that. Again, it's not a financial crisis. It's not the housing crisis. It's more of a health crisis. But we really need to see faith in institutions restored. And I think that's why all this news coming out of Washington in terms of their ability to get their hands around this crisis is so important right now.
Lori, we actually haven't heard of massive withdrawals by retail consumers yet. I mean, that could come as some of the negative price action continues, and we're hearing it on the margins. On the institutional side, though, the pressures are really strong in terms of a lack of share buybacks with companies preserving cash. And then you have companies like SoftBank, for example, saying they're going to cut back on investments because they're having some issues with their credit and with respect to their profitability. How much is that technical factor an issue just on the institutional side?
Look, I think the CapEx woes were well known. We had already suffered pretty mightily on that front because of the trade war. And if you look at different Fed regional surveys, some of the things like the Business Roundtable survey, we had seen that corporate confidence was still pretty low. CapEx intentions weren't really picking up in a massive way yet. I think what's been more of a surprise is the news on the buybacks and really seeing some of those banks come out and say, we're going to put buybacks on the shelf for a little while. That is something that's moving an important buffer for earnings, an important pillar of support for this market. And it's been understandable, but that is something I think that to me is a bigger deal than the CapEx change.
Lori, great to get your thoughts. As always, stay safe. My best to you, your family and the team, of course. Lori Cavacina, RBC Capital Markets, Head of US Equity Strategy. The banks this year, the KBW Banks Index, you mentioned the banks, Lisa, down 41.62%. year to date.
It's a dual shock, right? You've got lower interest rates, you've got benchmark overnight borrowing costs basically at zero or negative around the world, and then you have the specter of them having to absorb missed bills, credit card bills, auto loan bills, mortgage bills. What kind of credit are they going to have to extend? All the companies, they're withdrawing all the cash from their credit lines, and this is basically the Fed's trying to backstop that, but there are a lot of questions.
Painful for shareholders, not just in the banking sector, but worldwide. In the United States, the S&P 500 Spider ETF down by a little more than 6 percentage points. Much more still to come. Let's get your news, your headlines worldwide. Let's do that from New York with Michael Barr. Good morning, Michael.
Good morning, John and Lisa. There are close to 193,000 cases of coronavirus worldwide, with more than 7,800 deaths. Because of COVID-19, Americans are faced with increasingly severe restrictions on their movement as daily routines disappear. Bloomberg's Martin DeCarroll reports.
Millions of Americans are being told to shelter in place in the San Francisco area. That order now covers 8 million people. New York Mayor Bill de Blasio is considering doing the same.
And it's a very, very difficult decision.
Without a single federal mandate, cities and states are responding with varying levels of urgency. As late as Monday, West Virginia Governor Jim Justice downplayed the risk until his became the 50th state with a confirmed case.
We're going to beat this bad, bad disease.
In Kansas, Governor Laura Kelly is closing all K-12 schools
for the duration of the 2019-2020 school year.
The latest step toward the shuttering of almost all economic and social activity across the country. In Washington, Martin DeCarroll, Bloomberg Radio.
Washington is trying to move at warp speed, as Senate Majority Leader Mitch McConnell put it, to bring relief and financial aid to those impacted by the coronavirus shutdown. The White House is putting together a plan to make direct payments to Americans. Joe Biden continued to surge toward the Democratic presidential nomination with a dominating victory in Florida, the largest delegate prize of the night, and wins in Illinois and Arizona. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Lisa.
Michael Barr, thank you, sir. What a 5 days we've had. Thursday down 9.5%, up more than 9% Friday, down 12% Monday, up 6% Tuesday, down 6% Wednesday. What a roller coaster. From New York, happy to be with you all, staying with you right here live on Bloomberg Radio.
Vatsal Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology, and as an adjunct professor, is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the city on the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that? So in 10 years, we're actually ready to take on those challenges when we have our first development in the water. NJIT also has been doing a lot of work in self-healing materials. So taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma.
The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
This week's On the Media, the president thought he could defeat the narrative of COVID-19 with his usual tactic of, quote, censorship through noise. But the virus is proving resistant.
People's lives are going to be disrupted on a daily basis, and as that happens, the alternate reality he's created is inevitably going to implode.
Catch On the Media from WNYC. Listen to the On the Media podcast from WNYC Studios on TuneIn today.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. It is 8:17 on Wall Street. Futures this morning are on the decline. We go to the first word breaking news desk for today's morning call. Here's Bill Maloney. Bill, good morning. All right, we'll check back in with Bill in just a bit. Right now, S&P futures are down 92 points. Dow futures down 821. NASDAQ futures down 328. The DAX in Germany is down 5.8%. CAC in Paris down 6.1%. FTSE 100 down 5 1/3%. The 10-year Treasury up 1/32, yield 1.07%. Yield on the 2-year 0.43%, and the 30-year yield 1.69%. NYMEX crude oil down 9.2%, down $2.47 at $24.48 a barrel. And COMEX gold is down 0.6%, or $8.80 at $15.1660 an ounce. The euro 1.0979 against the dollar. British pound 1.1888, and the yen is at 107.35. And that's a Bloomberg Business Flash. John and Lisa.
Karen, thank you very much. As Karen explained, equity futures limit down. We've been that way since 1 a.m. Eastern time. The S&P 500 Spider ETF, that is negative by 5.72%. There are some key stories out there that we keep coming back to, and I want to keep coming back to as well. What is happening in Italy is really worth keeping a close eye on. The last thing we need is an even bigger crisis from another crisis elsewhere. We've got a crisis in the crude market. We had a drop below $25 a barrel on WTI for the first time since 2002. And we've just got this major move lower at the front end in Italy. Yields are higher in treasuries over the last 24 hours for the right reasons. For many people, we're talking about fiscal stimulus. In Italy, we're high for all the wrong reasons. We're talking about peripheral risk again. I'm not sure whether this story has gone far enough to start thinking about redenomination risk, certainly with a yield of 2% across most of the curve. I don't think we're there yet. In fact, I'll say I don't think we're there yet at all. But the direction of travel is going to be of some concern for anyone watching what is happening over in Europe at the moment. I imagine for a lot of people at the ECB it will be too.
Well, there's a question, at what point does this tip over back into another sovereign debt crisis? And you raised that specter. I mean, at what point do we have to worry about that too now, amid everything else, as central banks and policymakers try to address the coronavirus concerns?
Look, there's been a reluctance from the European Central Bank and President Lagarde to repeat those words that Draghi uttered back in 2012, whatever it takes. This market's going to keep pushing it until she comes out and says it. That's where we're at right now.
Well, the Federal Reserve has come out and said that they will do whatever it takes. And yes, perhaps some people would say that yields are rising for the right reason. But I don't know that it's so clear, because yields were rising today, and you saw also stock futures hitting limit down. It's unclear what message is being sent, and people talk about the incredible volatility in all of these bond markets with moves that really have not been seen before in developed market debt markets.
Let's bring in Ira Jersey, shall we? Bloomberg Intelligence Chief U.S. Interest Rate Strategist. He joins us on the phone. Ira, fantastic to catch up with you. What is going on in the Treasury market?
Yeah, so risk off is still the name of the game. I mean, the market got very, very overbought, and clear, like you guys were just mentioning, the fiscal stimulus plans globally yesterday certainly gave some optimism. And the reason for the pace of the moves, though, is that liquidity is still really, really poor. And this has nothing to do with anything that the Fed can possibly help with. So this isn't really funding. This isn't banks or dealers, worried about counterparty risk and going under. This isn't 2007 or 8. It's more that the aftermath of the regulations that we've had have really made dealers and bank balance sheets very inelastic. So their ability to take risk on a moment's notice has gone away. So when you have a lot of trading that is all one way, there's basically no backstop for that anymore. So you see these big moves. I call it the illusion of liquidity that we've had the last 10 years. It seemed like things are very liquid, but really when push comes to shove, they're not.
Ira, let's just put liquidity issues on the side for a second, and I want to talk about a point that you started with, the idea that there was optimism being baked into this bond sell-off in the United States that the stimulus would actually support the economy. Is that really right? Is that really what's going on, or are people also concerned about money printing, debasing the currency, and inflating the deficit?
No, I don't think it has much to do really with fears of debasing the currency. I mean, you would have seen much significantly higher, more dollar-related moves overnight if that was the case, and I don't think that is the case. But the idea that we will perhaps the economy won't be as bad as everyone feared is what the initial reaction to the fiscal stimulus. I can't even call it a plan. I mean, we haven't seen enough of the details really to call it a plan. But the concept that there would be a $1.2 trillion stimulus package, for example, just to help those worse off and affected by the social distancing and restaurant closures and the like, has to give at least a little bit of solace to people that say, okay, well, we thought we'd have GDP that would go down 10%. Now it's only going to go down 5%. That's a little bit better. That's one reason why I think you started the sell-off. But that was probably realistically only worth 10 or 15 basis points. But the fact that liquidity has been so poor has just pushed things way beyond and with much wider swings than you'd expect during normal times.
A terminal subscriber has just reached out to me and asked an important question about what is going to happen with this massive complex of negative yielding debt we have. It's actually fallen by a fair bit since March 9th. And I'm just wondering, from your perspective, how big the stimulus effort would need to be on the fiscal side to drive much more of that debt into positive yielding territory?
So it depends on the jurisdiction. I think in places like Europe, it probably in the periphery it wouldn't take very much because you'd wind up with higher credit risk. I mean, you guys were talking about what's going on with Italian spreads, for example, this morning. But in a place like Germany, I think front end yields probably are still going to be very anchored. They might move up 5 or 10 basis points on a large fiscal plan, but the curve would probably steepen. And if the market market thought that it would actually help the economy and help inflation be higher than the market's currently anticipating, then you could wind up maybe with 10-year German yields back up into positive territory again. So you could see a pretty substantial sell-off, but not because people are worried about the credit risk or the supply getting absorbed. That would more be based on economics, because places like Europe, like Germany in particular, Germany, the U.S., and Japan, the issue is not really credit concerns in terms of their debt. It's really, how fast is inflation, and what do real yields need to be in order to entice investors to buy that debt. So as real yields need to rise, that's much more a concern of inflation expectations. Of course, with oil doing what it's doing, no one's really worried about headline inflation right now.
Ira, great to get your thoughts. Ira Jersey there, Bloomberg Intelligence Chief US Interest Rate Strategist. On the bond market, turning to equities, the Spider S&P 500 ETF still firmly lower, down by 6 percentage points in early trading. The big banks like JP Morgan trading pretty much in line with that in pre-market trading, down by about 5.82%. But the areas of pain that we've picked up on over the last couple of weeks, still incredibly painful. Boeing, Lisa, down by a little more than 15% in early trading.
Brutal.
We'll be talking about that a little bit later in this program. From New York City this morning, good morning. This is Bloomberg Radio.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
In another circuit breaker this morning, with the stock futures falling as much as they could before the curbs kicked in, as traders try to assess the latest coronavirus-related headlines. One market strategist said it's not like anything else traders have seen before because of the unknown length and the implications of the situation. And crude oil is down to almost $25 a barrel, its lowest since 2003. Well, stocks rallied yesterday with the S&P up 6% on news of a massive stimulus package from the White House, Treasury Secretary Steve Mnuchin warned the coronavirus could send U.S. unemployment up to 20% without government intervention. The Trump administration plans to keep U.S. stock markets open despite the volatility, although the trading hours may be shortened. The Treasury Secretary said he's spoken to banks in the New York Stock Exchange, and they agreed on the need to keep the markets going, but the possibility of shorter hours did catch some executives by surprise. Gina Cervetti, Bloomberg Radio.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies? Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers. That saying, success breeds success, it's true.
Are we seeing any improvement?
Carol Massar and Jason Kelly.
How would you describe your outlook?
Weekday afternoons at 2 Eastern on Bloomberg Radio. Bloomberg Business Week, now live on YouTube. Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We are live on a Bloomberg Radio, and we have broken some key levels on cable. 118.45 on sterling right now. That is the pound against the US dollar. The low of the session happening today at around 118.28. So that takes out the low of the flash crash of October 2016, several months after the referendum. Just above that level right now, but wow, have we taken out some key levels on sterling, and really quite quickly. It wasn't so long ago that we were in the 130s, and now just a clean break of 120, 119, and now a break of 118 inside too.
I think you asked the key question of the day. Do levels even matter at this point, given some of the volatility that we're seeing?
I'm not sure they do. And quite clearly, looking at some of these big currency pairs in foreign exchange, they don't. Looking at the equity market, S&P 500 futures limit down since 1 a.m. Eastern time. The equity market, you'll read going into the cash open, 59 minutes away, comes from the Spider S&P 500 ETF, down 6% going into the opening bell. A ton of economic data we need to get you up to speed on. We can do that, as always, I'm pleased to say, with Vinny Dowd-Giudice. Hey, Vinny. Or maybe Vinny's not with us this morning. Has Vinny taken a day off, guys? Vinny's not with us. I'll get you the data myself, shall I? Housing starts month on month for the month of February coming in down 1.5%. Building permits month on month for the month of February coming down 5.5%. This, Lisa, is all going to be about the March data. Yeah. Not just for housing, but for every single industry. And myself, and I know many of the people listening, are going to be laser focused on initial jobless claims. The number that we get tomorrow, March 19th, is the week ending March 14th. Now, I wonder whether we start to see the pain already in claims, or whether you've got to wait another week for that. And bear in mind the levels we're coming off. Multi-decade low on initial jobless claims that don't account for the fact that we've had huge population growth since then as well.
Yeah, people talking about the momentum heading into this downturn and how much that can sustain us through and sort of accelerate the recovery. With the housing statistics, I think it'll be interesting to see. People can't go around and check out houses to buy them, right? I mean, you've got to imagine that housing purchases are going to grind to a halt. And talking about the data heading into the downturn, this had been one of the areas that had been the brightest spots. You'd actually seen ongoing strength given how low rates were, and given the jobless claims, given the consumer confidence.
Yeah, I think you've nailed it. This was a big tailwind for the economy through last year and driven by low rates. And this is an environment that we've been talking about for quite a while now, a good 4, 5, 6 weeks. If the Fed cuts rates into this environment, it's not going to make much of a difference to the housing market in the here and now, because as you point out, things are just going to shut down.
Which, I mean, all it will do is accelerate the refinancing, and you have professionals being hired at a record pace at all the banks to try to refinance everybody's mortgages because they're trying to capture these low rates. But when it comes to actually providing a stimulus and getting people to actually buy, I mean, how many people buy sight unseen? ultimately you can't go view, you can't go outside. And I just wonder what that will do to the builders. I mean, you just think about all the trickle effects, and it's kind of mind-blowing.
Should we bring Mitch Rousseau back on, shall we? PwC partner. He is our go-to guy on the world of housing in the United States of America. Mitch, fantastic to get you on the show with us. Walk us through what you're hearing, what you're seeing.
I don't think you guys need me. You nailed it. I think it's interesting. On the one hand, I think when people start getting cabin fever in their own cabin, they may question whether or not they need a bigger cabin. So there is an emotional reason to people to get out there and potentially buy a home. The problem is the lost wealth effect. While they're sitting at home and they're looking what's going on with their stock portfolio or even their bond portfolio right now, I think people are going to get the chills. The sad thing is the housing market really had made the turn probably in the last 6 months. We saw not only the data improving, but the reality was the trickle down was phenomenal because every time somebody buys a house, they buy a lot of stuff to put in it. So even if it was not a new home that was being built, and we did see new homes picking up, an existing home, you fill it with stuff, and that feeds the economy even more. So it's really an important factor to expand an expansion, and right now it's all come to a grinding halt.
Mitch, I want you to expand a little bit on the wealth factor, because that's something I've been thinking a lot about as people watch their 401ks and their investments in the stock market plummet in tandem with these huge swings. How much historically has that influenced people's willingness to buy homes, how much they're willing to pay? I mean, what's the correlation there?
I think it's about confidence. So there's a correlation between consumer confidence and housing activity. So if you wanted to look to one metric out there, you could look at consumer confidence, and we know what's going to likely happen to that data when it comes out from the Conference Board or University of Michigan. So I think that's the real thing. And I think there's a correlation between consumer confidence and wealth effect. We saw consumer confidence continuing to hit new highs right at the time that the S&P 500 was continually hitting new highs. So I think they're all heavily correlated. People do not go out and buy homes when they're worried about their employment. People do tend to refinance in times when they're worried about employment, but that's for the underwriters to worry about whether or not they're going to be employed. But the fact of the matter is, I can't see in this summer buying season people making any kind of bold moves with respect to home purchases.
Mitch, on the more immediate front, there's a question of whether people will be able to pay their mortgages if they are not getting a paycheck. President Trump raising the possibility of possibly allowing people to miss mortgage payments. How concerned are you from the credit side that you could see a huge tick up in delinquencies or even defaults in mortgages at a time when people had been saying that there was a really strong credit tailwind behind this as well, with people having really good credit profiles?
Yeah, and I think, Lisa, we saw, FICO scores continuing to improve. We've seen the balance sheet of the average consumer continuing to improve. The question becomes, when somebody's out of work, obviously, what benefits are they getting from their employer? What benefits, as in terms of unemployment, what enhancements may exist to unemployment? But if the average consumer out there is going to get $1,000 a month for a couple of months, if that comes to pass, I don't know that that's going to pay the bills. So the question really becomes, in what I call the rock, paper, scissors game, of which bills you pay and which bills you don't pay. Interestingly enough, in many jurisdictions, people end up not making their mortgage payment, and they pay for more immediate things. So we could, in fact, see a spate of defaults starting to tick up in the quarters to come.
Have we learned anything from the financial crisis in 2008, Mitch, about how best to deal with people that fall into delinquency?
I think here's what we've learned from the financial crisis. The mortgage industry is completely different today than it was before. And you have people who have down payments in their homes, and then 10 years ago they didn't. So I think the profile of the typical buyer today is much different than it was before. The underwriting standards are way more rigorous today than they were before. What we haven't done is test this profile of borrower in an economic downturn. And I would venture to say a buyer that had put 20% down or more on the purchase of a home, and the home values, may hold up to some degree. We may not have a lot of price discovery, but I think home values may hold up to some degree. That may be the only equity that they sort of have left, and they may fight to hold on to that. So the question really becomes, what stimulus do you have to pump into the mortgage-backed securities market and to the banking system to keep them keeping borrowers in their homes?
Hey, Mitch, great to get your thoughts on the programme this morning. My best to you and the team. Mitch Rochelle there, PwC partner on the housing data. Really tough part of the market, Lisa, and this was a tailwind for the broader economy in the United States through last year. Hard to make the argument, in fact, very difficult, almost impossible to make the argument that low rates in this very unique environment we're in right now is going to do much for housing activity.
Yeah, I would agree with that. You also asked, what have we learned from 2008 in terms of treating delinquencies and defaults? And I think this goes to the heart of what President Trump was talking about, the idea of just allowing people simply to skip mortgage payments, not throwing them into default or delinquency in order to keep them in their homes, in order not to have a mass exodus and a mass devaluation of everybody's house.
It's in everyone's interest to make that happen. If you believe the health crisis is temporary, why would you want a series of messy defaults and to spark a big bout of deleveraging, which is going to be with us long after the house crisis fades?
It's just, I've been trying to think through the technical way that banks are going to actually do this. I mean, because they're covenants, they're contracts. So how do you sort of throw away the contract temporarily and allow some of the missed payments? And we don't know how long it's going to continue. I mean, these are all very real questions that I'm sure all of the underwriting desks and mortgage desks are thinking about right now.
We'll do our best to stay on top of some of these big questions for you right here on Bloomberg Surveillance. You are listening to Bloomberg Radio, and I'm pleased to say we have some news, some headlines worldwide, and we have them with Michael Barr. Good morning, Michael.
Good morning, John and Lisa. There are now more than 6,400 cases of COVID-19 infections in the United States and 108 deaths. The virus has now been confirmed in all 50 states, and cases are expected to skyrocket. Emergency physician Dr. Stephen Anderson has been on the front lines of the battle against the coronavirus in Auburn, Washington. He says his area has a shortage of protective gear healthcare workers need to prevent infection to themselves.
If people get sick and they're out, that takes people off the front lines to help with this. But by the same token, you don't want to be sick and be around the people that are coming to the emergency department, who are already the sickest people in most need in America.
Coronavirus-related measures and shutdowns are expected to put millions of restaurant, bar, and hospitality workers out of work. Tanya Palkaninik says she was laid off from her bartending job in New York City due to restaurants being limited to takeout only.
It definitely felt like a weight had dropped. Felt very heavy. But yeah, it was scary.
California, New York, and Illinois have the largest number of restaurant and hospitality employees in the country, a total of 3.6 million people. Joe Biden's sweeping victories in Florida, Illinois, and Arizona are building his delegate lead over rival Bernie Sanders in the Democratic presidential race. Biden's quest for his party's nomination now seems well within reach. According to Biden's trio of wins, it doubled his delegate haul over Sanders, giving him a nearly insurmountable lead. Now, there was supposed to be a fourth state holding a primary yesterday, Ohio. The officials delayed its election until June because of coronavirus fears. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Lisa.
Michael Barr, thank you, sir. Thank you very much. Always great to catch up with you. Just had a message off a terminal subscriber, and I should say thank you to everyone that's been reaching out over the last couple of weeks. Really appreciate your support. We will do our best to keep everything on the road, on the tracks, on the rails, and bring your programming live here on Bloomberg Radio and on Bloomberg TV. As you work your way through this health crisis, we'll stay on top of the public health issues and the financial markets much more so on a program like this. One person pointing out to me, Lisa, take a look at the yield curve. Hardly anyone's talking about this one now. March 9th, the spread between 2s and 10s was just 2 basis points on an intraday basis. We didn't close there, but that's how tight things got. That spread has widened out to around about 64 basis points, driven by some massive moves at either end.
And I'm trying to understand if this is a positive or a negative in terms of the expectations going forward. A lot of people interpret a steepening yield curve as positive, that low rates now mean faster growth later. And yet it's coming at a time of such great uncertainty and volatility, particularly in the Treasury market. Just to give you some scope into that, that is the widest that yield curve has been since 2018.
Yeah, I'm tempted to say it's 1 part fundamentals and 10 parts messy technicals over the last couple of weeks.
Completely agree.
From New York City, good morning to you all. This is Bloomberg Surveillance. We are live.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. Shopping for a home right now is not for the faint of heart.
Well, the buyers that are out are very aggressive.
Brian Meyer, Associate Realtor with Christie's International Real Estate, says many are taking extra precautions.
Right now we have masks, we have gloves, we have booties for the clients. Yeah, and we're doing whatever we can to meet that sensitivity with that client. But we do have clients that are very sensitive to it. And we're doing video showings in some cases. In other cases, we're getting covered up as we go into the property.
And those brave enough to be out looking are in a hurry.
If you're going out looking at property right now, you're aggressive. And the buyers that are coming out are, I believe, looking to take advantage, or what I'm seeing is they're looking to take advantage of the interest rates.
Tomorrow, we'll take a look at how the coronavirus is driving up demand for summer rentals, even though it's only March. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Elite advisory firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon NA. Member FDIC.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and European sovereign bonds are leading a global rout, with markets bracing for the kind of supply surge not seen for years after nations unveiled spending plans of more than $1 trillion to fight the coronavirus crisis. Oil prices are plunging below $25 a barrel for the first time in almost 18 years after Saudi Arabia made another shock and awe attack in its price war with Russia, vowing to keep production at a record high over the coming months. And U.S. stock index futures are on the decline this morning. They hit limit downs this morning. European stocks also falling. This after the S&P 500 jumped 6% yesterday. And we check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures are down 92 points. Dow futures down 821. NASDAQ futures down 328. The DAX in Germany is down 5.1%. 10-year Treasury down 6/30 seconds. Yield 1.09%. The yield on the 2-year 0.44%. And that's a Bloomberg Business Flash. Lisa.
Thank you so much, Karen. A lot of what's been driving a lot of the sentiment has been, what the fiscal response will be. And yesterday we heard from Washington, D.C., from President Trump, a more than $1 trillion stimulus, including $1,000 checks to be mailed to Americans in short order. Joining us now to kind of parse through some of the details and understand the economic implications, Professor Jason Furman of Harvard's Kennedy School. And I am so pleased to have you here. Also non-resident senior fellow at the Peterson Institute for International Economics. You were a top economic advisor to President Obama. First, can you just start with what was your sense? How effective do you think the stimulus measures that were outlined yesterday will be?
I think they'll be as effective as they can be. And I realize that's an unsatisfying answer. Part of the issue is that right now, the economy needs to be shut down, or large parts of it, in order to contain the spread of the virus. And so one of the goals of the stimulus is to make sure that people are protected during that period. The second goal is that when the economy can reopen, that we're positioned to grow back and spring back as quickly as we possibly can. But in the short run, nothing's going to change the huge economic effect of the completely necessary health measures that are being taken.
There is a question, though, of how to allow people to keep in their homes, to keep covering their bills, to eat. And the $1,000 checks, helicopter money essentially being sent around, was one way to try to address that. Will that be sufficient? I mean, is this sort of a tried and true method that can be put out there to soften the blow?
It's one of the best methods we have. We would love to be more hyper-precise, more hyper-targeted, but there's so many different types of people in this economy, gig workers, people getting their hours cut, people temporarily laid off, people getting less tips. We don't have a super precise way of reaching all those different types. And so this is a pretty blunt. It, over targets rather than under targets. And I think that's exactly the error that one should be making right now. The government also just doesn't have huge capacity with people teleworking, their children at home, and some of them will be starting to get sick.
Professor Furman, you've been advisor to Presidents Clinton, Obama. You've looked at the economies through history. I'm just wondering, how deep and how long-lasting do you think this is going to be as we get more information about how vast the shutdown is?
Economists have two models. One is a V-shaped recovery. Everything turns off for a few months, everything turns back on again. I think that's possible, but I wouldn't count on it. And I certainly wouldn't sort of assume we don't need any policy because of it. So the second model is a more protracted downturn, because when the unemployment rate can go up quickly, it can't go down quickly. Businesses can go bankrupt, they can't go unbankrupt. And all of that creates a bit of an asymmetry that means that this could be quite prolonged. And that's the situation that policymakers should be most worried about, and something I think they can do something about.
Professor Furman, I know we have to let you go just real quick. A number of big investors have said we are facing the potential for a depression. Is that something that you think is accurate?
Can I tell you the thing that makes me most optimistic?
Please.
Is, everything we're doing on health, when you look at San Francisco, when you look at New York, when you look at Massachusetts, around the country, it's really scary. That is good, because that will be the way we beat the virus. When you look at what the Fed is doing, it's incredibly dramatic. You look at this $1 trillion stimulus, that's incredibly dramatic. I think the vigor and focus on the policy response will hopefully mean that we'll end up proving some of these prophecies wrong by our own actions.
Professor Furman, thank you so much for your time. Please stay healthy. We really appreciate the perspective and, frankly, the optimism on a day when there isn't a lot and stocks are limit down in the futures market. Once again, Jason Furman, professor of the practice of economic policy at Harvard Kennedy School, also former White House Council of Economic Advisors, one of the chief economic advisors to Presidents Obama, Presidents Clinton, having worked also at the World Bank. A really key perspective here as we look at markets churning, trying to understand what the new future really looks like. Right now, futures still limit down in the U.S. We have bond yields climbing around the world, particularly in Europe, as people assess the prospect of printing money, as people wonder what the backstop will be from the ECB in terms of buying debt, particularly on the peripheries. Here in the United States, the volatility has been just tremendous when you talk about Treasury yields, although you are seeing 30-year yields now flat on the day. They had been up with bond price down, yields up. Now they're flat at 1.687% after yesterday being the biggest sell-off, the biggest one-day increase in yield in the 30-year Treasuries going back to 1982, raising a question, and Paul Sweeney, who's joining me for the next hour, raising really a question of where the havens are. You're seeing gold sell-off, you're seeing sovereign bonds sell-off, you're seeing stocks sell-off, and there's a feeling of the only place to hide right now is the dollar, and that's it. Perhaps the yen. Yen and dollar.
Exactly right, Lisa. Good morning. Yeah, I think the dollar seems to be the place, and as you mentioned, the yen a little bit. But you look at the traditional havens like gold, as you mentioned. We've seen that been selling off really for the last week or so as margin calls, if for nothing else. And so, just kind of showing you how the risk-off field globally across asset classes is certainly just kind of growing, quite frankly, as the uncertainty continues.
Yeah, and 10-year yields, I should say, are up a little bit now, over 1%, 1.093%. Just to give you some levels here, if the stock market in the U.S. opens the levels we're currently indicated, with futures down, limit down, we would see the S&P below 2,400 at 2393. The Nasdaq would be 7064. Of course, if you take a look at the SPY index, the SPY ETF, which is still trading in the futures market, you could see that it is lower now, 6.5%. Just give you an indication of how steep the pain may be. A brutal time. VIX futures, record high levels of volatility, stomach-turning moves. We're setting up for another volatile one. From New York and from places unknown and removed and socially distanced, I'm Lisa Abramowitz with Paul Sweeney, and this is Bloomberg Surveillance.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
This is a Bloomberg Money Minute. Volatility continues to roil the stock markets, with pre-market trading indicating that the S&P 500 is likely to trigger a market-wide trading halt for the second time in 3 days. An exchange-mandated circuit breaker will stop action for 15 minutes if the S&P falls 7% from yesterday's close when the markets opened this morning. One portfolio manager says investors are in a murky environment where people don't know how to factor in the impact of the coronavirus. Stocks surged yesterday with news that the White House is preparing a big stimulus package. General Motors, Ford, and Fiat Chrysler will partially shut down their U.S. plants on a rotating basis in an effort to contain the spread of the virus. Car manufacturing has virtually ground to a halt in Europe this week. And crude oil continues its slide, down almost 9% again today and under $25 a barrel. Gina Cervetti, Bloomberg Radio.
Our relationship with Asia is simple. Find the most experienced journalists.
These countries will need each other more and more in the future.
Let them gather the best data and experts.
Let's get to Singapore now and our guest.
Then bring everything they find straight to you.
Let's talk about where you are. There's quite a lot of headwinds there too.
Actually, it's not simple. It's just better. Bloomberg Daybreak Asia, tonight at 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. We have to get it right the first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
Once we get through coronavirus, it's very supportive and very stimulative.
Central banks themselves got caught hostage by markets.
Finance.
OPEC Plus is at war with itself.
We know we can create America's energy independence again.
Investment.
The market's anticipating the rate getting very close to zero in fairly short order.
Volatility is back, so that's going to make for more cautious trading.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good Wednesday morning from New York City and points beyond to our worldwide audience. Paul Sweeney here along with Lisa Abramowitz. Tom Keene is off this week. Governments around the world, led by the U.S., are ramping up fiscal stimulus to fight the economic effects of the coronavirus. And the roller coaster in financial markets continues as equity futures are once again trading at a limit down levels. Treasury yields are slightly in this morning. The dollar is once again rising as a safe haven asset. Crude oil continues to plunge with West Texas Intermediate crude down about 9% to under $25 a barrel. Lisa, the volatility that it's kind of become the new normal here is certainly with us again today, despite the fact that it appears that federal governments around the world are starting to really step up and address this issue.
It's definitely new. I don't know that anyone feels like it's normal just yet because the volatility has been unprecedented. We have VIX futures reaching to new record highs. I'm just looking right now. It's every asset class. And I think, Paul, that's one of the distinctions between this crisis and previous crises is that everyone is just throwing up their hands and saying, we don't know. Even virologists are looking around and they're saying there's so much we don't know about this virus. And Wall Street's saying this is a health crisis. And yet you're also seeing the strains kind of gunking up the financial system in some crucial places. It's kind of getting a lot of people worried.
Yeah, absolutely. So I think the issue here for people is just to get a sense of kind of where we're going to be over the next several weeks and how is this going to play out? And can we, in fact, flatten the curve?
Yeah, maybe that's Jay Powell calling you over there, telling you how they're planning to do that. Meanwhile, we are limit down in equity futures here in the U.S. And Dave Wilson, Bloomberg stocks editor, has been on this roller coaster for the past few weeks with us. And I'm just trying to understand how to even frame today's action. I mean, yesterday we saw a real surge trying to recover some of the losses from the worst declines since 1987 on Friday. Now we seem to be heading straight back down. Can you give narrative to this, or it's just, I don't know?
Oh, you can fall back on a lot of the groups that have kind of led the declines over the last few weeks, and the individual stocks as well. And front and center today is Boeing. It's down 18% in early trading. The plane maker's lower after calling for at least $60 billion in U.S. government aid for itself and its suppliers. And bear in mind, today's loss follows a drop of 46% in the last 5 trading days.
Wow.
And Boeing actually rose on one of those days, too. It just goes to show you. You look at the suppliers to Boeing, they're lower. General Electric, notable on that score. The maker of jet engines down 9% in early trading. United Airlines, talking about Boeing's customers, lower by 11.5%. The carrier cut its April flight schedule by 60% as the coronavirus outbreak keeps people from flying. You look at the other airlines, you see American down 10%, Delta down 8%, Southwest down 7.5%. Then you turn to the cruise lines. Carnival's down 12.5%. That stock is trading at its lowest price since 1995. After plunging more than 70% in the past 6 weeks. Then you got Royal Caribbean down 9% and Norwegian down 6% too.
So here's what I'm struggling to understand. We're seeing these kinds of declines today after the U.S. announced plans for more than $1 trillion of stimulus. We have Bank of England coming out just now and saying they'll do whatever it takes to support the economy. You've got the ECB. You've got Germany considering expanding its deficit or actually having a deficit. I mean, you have all of these responses, and none of that seems to be, I guess, staving off some of these declines or staving off some of the volatility.
The responses have to play out first. Things have to be passed. Money has to be given to people. And in the meantime, business is shutting down. Las Vegas Sands, the latest example. The casino owner closing its Venetian and Palazzo resorts in its namesake city until at least April 1st. Las Vegas Sands is down 10.5%. And you look at their competitors, MGM Resorts down 6.5%, Wynn Resorts down 12.5%, and then you turn to the banks. We got a story out today talking about the possibility that the 6 biggest banks may get tapped for $700 billion in financing by companies as they use their credit lines.
Although, in fairness, that story was talking about how they do have ample liquidity at this point. No one's saying that they're going to become insolvent. And this is sort of one explanation for the Fed's injection of some support with the commercial paper facility, and how with Janet Yellen and Ben Bernanke writing a joint op-ed, as John Farrow was pointing out, basically advocating for the Fed to buy corporate bonds. I'm just saying, this isn't to say that there's necessarily a systemic crisis stemming from the banks, and I think it's an important thing to clarify.
Fair enough. You're talking about more stress in the financial system,
Fair
though,
enough.
And it doesn't do the banks any favors. Bank of America and Citigroup both down 7%, JP Morgan Chase down 6.5%, Wells Fargo down 6%. You look at the biggest technology companies, Apple's down 5%, Microsoft's down 6%, Advanced Micro Devices down 6.5%. Then you turn to the energy stocks. We've already talked about crude falling below $25 a barrel in New York trading. You got ExxonMobil down 6.5%, Chevron down 7%, ConocoPhillips down 7.5%. That company came out today and said it's going to cut capital spending and stock buybacks to save $2.2 billion. You know how bad it is at this point? General Mills, whose earnings for their latest quarter actually beat estimates, is down 4.5%. Now, I will say the food maker's fiscal third quarter results showed sales trailed estimates for the 4th straight quarter. And General Mills said it isn't sure how the coronavirus will affect results just yet. I mean, we do know a whole lot of people are going to the supermarkets and stocking up on stuff, though.
Dave Wilson, Bloomberg Stocks editor, thank you so much. You'll come back, You'll do more. A lot of stocks to be tracking. I will say, Paul, toilet paper.
Yeah, boy.
That's it.
That's it. I mean, a lot of double-digit declines once again from Dave Wilson. As
Double ply.
Brings us, just exactly.
Sorry, that was terrible.
Right now, Dave Wilson, thanks so much. We appreciate that. Dave Wilson, Bloomberg Stocks reporter, we appreciate that. The amount of the economy and all the daily activity that's being impacted by this coronavirus is just extraordinary. It's not just the day-to-day for people being shut in. It also applies to pieces of the U.S. government, including the Supreme Court of the United States, taking a hiatus. Jordan Rubin, he covers Bloomberg Law for Bloomberg, and he covers the Supreme Court. Jordan joins us here. Jordan, we really appreciate you joining us here. So this coronavirus impacting day-to-day life, daily life, is even applied to the Supreme Court. Give us the latest.
Sure. So the Supreme Court's building itself is closed to the public. The court has said that official business will go on, but we've seen an adjustment to that very recently where the court took the highly unusual step of postponing its upcoming March argument schedule. And so that's something that really has not happened in quite some time. So we're seeing even the Supreme Court, which ordinarily is functioning even when other parts of government are not, even taking a hit here due to this virus.
So, Jordan, give us a sense of what this means, kind of day to day. I mean, give us a sense of how the Supreme Court operates. How many cases are going to be impacted by this? How long could this possibly last?
Sure. So the upcoming argument session, it's a 2-week session where there's going to be a half a dozen cases or so that were set to be argued. And so those arguments are now put off. For one thing, it means that attorneys who are set to come to Washington and argue these cases now, there's a hitch in their schedule. Obviously, preparing for a Supreme Court argument is a huge thing. And so there's uncertainty injected into that. There's another argument session that's still on for next month. And so as far as these attorneys know, they're going to be set to argue again. But who knows if they, in turn, are also going to have to change their plans at the last minute. So in a word, I would say it boils down to uncertainty, just as we're seeing in other aspects of the country. But here we're seeing it apply even to the Supreme Court, which usually, as I mentioned, is going on when other parts of government are not. But even the Supreme Court is not immune from this certainty here.
So were there any major, really high-profile cases here that are being impacted?
Sure. Well, one of the arguments that was going to happen in this upcoming session that was just postponed are the consolidated disputes about subpoenas into President Trump's financial information. So this is obviously one of the most closely watched disputes of the term. And now we don't know when those arguments are going to happen. You have people who are clamoring to get President Trump's financial information. And so they're calling on the Supreme Court not to unduly delay a decision in this case just due to the virus. So there's uncertainty into that case now as well.
So is there, a lot of us now are working remotely. Does the Supreme Court work remotely?
So in the Supreme Court's latest announcement in announcing that the March argument session is postponed, they did note that they're essentially setting up some more remote working capabilities, and the justices are going to have their regularly scheduled conference this coming Friday, where in private they discuss pending matters, and the court noted that some justices may be calling in remotely to that session. And so while the court isn't going out and saying exactly which justices those might be, even the court is potentially working remotely in this situation too, just like the rest of us.
So, Jordan, is this just a case of cases will just be pushed back a little bit? They'll all get heard in their proper order, but they're just going to be pushed back like a lot of other things in our lives these days?
Yes and no. So we know that they're going to be pushed back, but the question is how far? And we just don't know that. So take these March cases, for example, that just got postponed. They could very well wind up being argued, say, next month or sometime later in the spring. Now, just as some backdrop here, the Supreme Court generally issues all of its decisions in argued cases by the end of June. So the Supreme Court could still hear these March cases argued later in the spring and still issue a decision in time. Now, the fact that these decisions usually come down by late June, that's really just a matter of custom. There's no law saying that has to happen. So the Supreme Court could potentially even extend its customary end of the term decisions a little later than June, possibly into July, or who knows.
Right. Jordan Rubin, thanks so much for joining us. We really appreciate it. Very interesting that the coronavirus is even impacting the day-to-day operations of the Supreme Court. Jordan Rubin covers the Supreme Court for Bloomberg Law. We appreciate his comments here. So, again, the Supreme Court pushing back some of their decisions probably for at least a month or so. Right now, let's get world and national headlines with Michael Barr. Michael.
Paul, thank you very much, Lisa. The White House has sent Congress an emergency $46 billion spending request for coronavirus-related funding this year. That is separate from President Donald Trump's proposed economic package to rescue the economy from the effects of the virus, a package that could hit $1 trillion.
We're deeply committed to ensuring that small businesses have the support they require. The Small Business Administration announced disaster loans which provide impacted businesses with up to $2 million, and we've asked Congress to increase the SBA lending authority. We're going to be going up to $50 billion and actually much more than that for small businesses, so they'll be helped.
The emergency spending request, which the administration sent Congress overnight, is to fund production of vaccines and medicines, reimburse Amtrak and anticipated revenue losses, and reverses cuts to the Centers for Disease Control and National Institutes of Health that Trump proposed in his budget for next year. The coronavirus pandemic comes as millennials are on spring break. Beachgoers in Florida are being told by the governor to limit beach groups to no more than 10 people. Fort Myers officials say they will start cracking down today after larger groups of spring breakers gathered on the beach yesterday. Fort Myers Mayor Anita Siraceta.
We're trying to be as strong and yet gentle as we can with people because, look, everybody is frightened.
Joe Biden continued to surge toward the Democratic presidential nomination with a dominating victory in 3 states. Biden easily won the biggest delegate prize of the night, Florida also winning in Arizona and Illinois. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg Poll.
Michael Barr, thank you so much. We appreciate that. We are limit down on U.S. Equity futures here. S&P down 3.7%, the Dow down 3.9%, and NASDAQ down 4%. I am looking at oil just breaking down here. West Texas Intermediate crude down $3.11 per barrel. That's 11.5%. That is bringing us to $23.87 per barrel on oil. Just breaking down here on the concerns about global demand and, of course, the oversupply coming from Saudi Arabia and Russia. This is Bloomberg.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seize change.
Influential conversations from Bloomberg Television. Here's Emily.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
This week on the New Yorker Radio Hour, I'll talk with the author of a fictional story about a global pandemic that right now feels all too real.
All I did was just drew upon the trends. I just extended them. Unfortunately, real life seems to have outraced even some of my imagination.
Lawrence Wright joins me on the New Yorker Radio Hour from WNYC Studios. Listen to this episode on TuneIn today.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and volatility continues to roil U.S. equity markets. We check the markets every 15 minutes throughout the trading day on Bloomberg. And yes, limit down for futures with S&P futures down 92 points, Dow futures down 821, and NASDAQ futures down 328. The DAX in Germany is down 5.5%. CAC in Paris down 6%, and the FTSE 100 is down 4.7%. 10-year Treasury down 8/30 seconds, yield 1.10%. The yield on the 2-year 0.45%. 30-year yield 1.68%. NYMEX crude oil is down 11.5% on $3.08 at $23.86 a barrel. COMEX gold is down 1.6% on $23.40 at $15.0250 an ounce. The euro 1.0926 against the dollar. British pound 1.1851, and the yen is at 107.78. And that's a Bloomberg Business Flash. Paul and Lisa.
Thank you so much, Karen. The big focus today and yesterday and this week and last week and this month has been fiscal stimulus. What kind of fiscal response are we going to get to bridge the gap between now and whenever the coronavirus concerns and shutdowns end? And we don't know when that will be. And we did get some guidance yesterday from the White House, and in particular from Treasury Secretary Steve Mnuchin, who's been working on the Hill to get something passed. We got the initial idea of a fiscal plan that would be a $1 trillion stimulus, including $1,000 checks mailed to Americans. Within 2 weeks, Kevin Cirilli, head spinning yet? Chief Washington correspondent covering all of this and all things D.C. I'm trying to get a sense there in the Beltway. What sort of is the likelihood that this is going to pass today, the plan that we heard yesterday that was outlined by the White House?
If not today, in the next several days. Look, I mean, the first part of the economic stimulus bill in the Senate, that still is making its way through. But Senate Majority Leader Mitch McConnell has said that he is not going to adjourn the Senate until economic stimulus happens. So 3 quick points that I would make here. First and foremost is that Mnuchin and Pelosi are working virtually round the clock, and they're working from the same political playbook. The second point that I would make is that partisanship on this issue has virtually disappeared. There are a few outliers, however, not enough substantial outliers to significantly hinder the chances of a stalemate. And the final point is just I want to quickly just brief everyone on the updates of what the administration is going to be doing this morning. At 10:45 a.m. Eastern Time, the president is going to participate in a business roundtable quarterly conference meeting. He's going to call into that. The Business Roundtable, of course, the gathering of the nation's top CEOs. They'll all be teleconferencing in. And then at 11:30 a.m. New York time is the coronavirus task force, where the president will also participate in that, along with Vice President Trump. It's unclear right now if Secretary Mnuchin will also be there, though I anticipate he will, just given the dynamics of the past several days. So that's where we stand from an economic stimulus point as of now.
So people have talked about the $1,000 checks, the helicopter money aspect of this plan. Can you outline some of the basic aspects of it that we can be expecting to be unrolled in short order?
Well, the details in terms of who precisely would get the $1,000 checks, that's still being quickly decided. But it would go immediately into Americans who are most impacted by this. Think of the workers who are on Main Street. Think of the workers who are being thrust into this as a result of restaurants, as a result of small businesses, construction workers. And that is really where the focus is. But I would also suggest that even in this portion, this phase of this, the administration is saying that additional relief would also come in a $500 billion stimulus in a second phase of economic stimulus. And another point that I would emphasize here is that this is just one tool that the administration and Washington has. They could also be utilizing, and they are, the Small Business Administration. The U.S. Chamber of Commerce has put forth various different proposals. I have to be candid here. In covering financial services for the last nearly decade in Washington, D.C., virtually every source on both sides of the aisle on Capitol Hill are all putting out proposals right now. It's and on the one hand, a positive development that they're all on the same side, but there is, I think it's caused for Pelosi and McConnell, they have to lump all of that together to get to the best ideas. There's an influx of economic ideas right now.
So, Kevin, also in addition to consumers, there's a lot of industries are coming to Washington with their hand out here. I'm thinking about the airlines and the cruise industry. How do you think that's going to play out?
Look, I think that there's no question that there needs to be economic stimulus. I think that the first priority is going to be to get, I'll use the term helicopter money, but I think relief is a more apt word. I think the relief is going to be coming the first phase of this, because there's an understanding here. I mean, for folks all around the country, for workers of big banks, for workers of the hospitality industry, many of these people, as we all know, many of these people cannot go 2 weeks without a paycheck, and that would be crippling. I mean, the Secretary's dire warning that unemployment could seek to 20% if lawmakers don't act in terms of a relief has really cast a grim shadow and ignited a sense of urgency for lawmakers to rally behind in terms of the economic impacts of this.
And so, Kevin, we've seen a change in tone, I think, from the White House and from the president over the last few days. What do you think really spawned that?
Data. I think the data that has come out of the scientific community from South Korea, from Japan, from Italy, other European allies, I think the data has suggested that this is something that everyone needs to take seriously and urgently. And again, I just want to stress this. I mean, the economic stimulus ideas that are circulating on Capitol Hill right now are moving so incredibly quickly, and I don't, based upon my reporting, see any significant risk in that not being executed.
So, Kevin, just briefly, we got this $1.2 billion. You mentioned another $500 billion. Is there a sense that this is going to be an ongoing type of fiscal stimulus, kind of over the next several months, perhaps?
I think over the next year, yes, absolutely. And I think, if you look at the way other countries have reacted to this, there's a report out that India is providing economic stimulus in this regard as well. I think this is something that everyone is going to be grappling with. But as the Secretary said just 48 hours ago, he said that we were in the second inning. I think that this is going to be something that folks are going to be, the stimulus of this is going to play out for the next year. At least.
Kevin, we appreciate that commentary and that reporting. Kevin Cirilli, Bloomberg's White House reporter, reporting from Washington, giving us a sense of, the fiscal stimulus that is coming fast and furious from the White House and from Congress. Seems to be a renewed sense of urgency here, and as Kevin was reporting, a lot of bipartisanship as well, looking to get this legislation moved forward and get money into the hands of consumers as soon as possible. Secretary Mnuchin talking about within 2 weeks. So again, a new sense of urgency, when Kevin will keep us up to date on that. Again, futures right now, equity futures limit down, the S&P down 92, the Dow down 821, NASDAQ down 328, and we're still looking at oil down $3. Just incredible. This is Bloomberg.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right. Use it. To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
This is a Bloomberg Money Minute. Very possible we could see trading curbs kick in at the opening bell this morning once regular trade.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
This week on the New Yorker Radio Hour, I'll talk with the author of a fictional story about a global pandemic that right now feels all too real.
All I did was just drew upon the trends. I just extended them. Unfortunately, real life seems to have outraced even some of my imagination.
Lawrence Wright joins me on the New Yorker Radio Hour from WNYC Studios. Listen to this episode on TuneIn today.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
An exchange-mandated circuit breaker would stop action for 15 minutes if the S&P 500 falls 7% from yesterday's close. Another 15-minute pause would happen if S&P losses reached 13% when trading resumes. If the drop hits 20%, then the markets would close for the day. Governments are finally starting to see that they'll have to run exponentially bigger budget deficits to stay afloat as the coronavirus brings the world economy to a sudden halt. And crude oil continues its slide, now below $24 a barrel. And more of the nation's biggest department store chains are shutting down their physical stores for now. Macy's, Bloomingdale's, Neiman Marcus, and Nordstrom among them. Gina Cervetti, Bloomberg Radio.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions. Why all the top-tier experts? Because business is not a magic trick.
Give us a sense of the economic backdrop.
Bloomberg Markets.
Which financial records are these?
Weekday mornings at 10 Eastern on Bloomberg Radio. Bloomberg, the world is listening. Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
And I'm Karen Moscow, along with Paul Sweeney and Lisa Abramowitz in the opening bell, brought to you by SEI. With a 50-year history of innovation, SEI's outsourced solutions help achieve lasting success for investment managers, asset owners, private banks, and independent advisors. Learn more at SEIC.com. Right now, the S&P 500 is down 5.4% at the open. It's down 136 points at 2392. Dow Jones Industrial Average down 6%, down 1,263 points. It's at 19,971. The NASDAQ is down 5.5%. It's down 404 points at 6928. 10-year Treasury down 4/32, yield 1.09%. The yield on the 2-year 0.45%. NYMEX crude oil is down 10.5%, down $2.85 at $24.10 a barrel. COMEX gold down 1% or $15.20 at $15.11 an ounce. The euro 1.0924 against the dollar. The yen is at 107.77. Paul and Lisa.
Karen Moscow, thank you so much for that. We really appreciate, again, another very, very weak opening on the markets here. We're down about 5.8% on the Dow here. Get a sense of what's...
I will say,
Lisa.
We're not at least limit down yet.
We're not limit down, so you're looking at the silver lining, aren't you?
I mean, gotta try.
Try.
Come on.
All right. Here's somebody who's going to just shred that silver lining. Damian Sassower, Bloomberg Intelligence Chief Emerging Market Credit Strategist. So, Damian, in your world, you're used to risk, you're used to big swings, you're used to volatility. Emerging markets, what are you seeing today?
Yeah, you really can't just look at emerging markets without looking at developed markets. And the global treasury market, not just U.S. treasuries, global treasuries, the liquidity is absolutely horrendous, Paul. I mean, COVID has fundamentally changed the risk profile for issuers and securities, and this is quickly metastasizing from liquidity stress into balance sheet stress. And so I think the way, I was just talking to a friend the other day. He's running, big risk at a big bank, and they've had to cut limits by 80% in many areas. So just when the banks are supposed to be providing liquidity to markets, the Volcker rules and all the other different constraints are preventing them from doing so. It's very, very concerning.
Hold on a second there. I want you to back up and actually unpack this a little bit. People have been crying about the lack of liquidity, particularly in the U.S. Treasury bond market for the past few weeks, saying that it is terrible and that until we get this under control, the rest of the markets are going to continue to be volatile. Can you explain what the dynamic is, why it has gotten so much worse during this period based on dealer activity?
Well, really, it's just it's COVID-19, right? Nobody really knows exactly what the impact's going to be, and that's why you're seeing volatility in the market go up. And when vol goes up, the value at risk limits on trading desks and banks, for that matter, they become that much more restrictive in the current environment, right? And so this is a VAR shock, Lisa. And so what it means is that we need to see volatility go down in global assets. Good luck there. In order for some of these guys to be able to lend to some of the the lower credit quality borrowers. And so that's really the risk here. And if you just look at some of these central bank swap lines to other countries, there's really only 5 other central banks we have lines open with. They're going to have to expand that, in my opinion. And they may also need to start lending not just to banks, but to non-banks. The biggest users of the FX swap market, Lisa, are life insurance companies, asset managers. We may need to start lending to them directly because the banks seem to be unwilling to do so.
And that's actually something a growing number of people are proposing, that the Fed needs to open up some of its facilities beyond just the dealers. I want to talk a little bit about what people are buying. One of the few things is the dollar, and the dollar is on a surge. It's the highest since 2017. Really upending a lot of emerging market currencies. I'm looking at the Mexican peso, for example. It's selling off. It's weakening versus the dollar at the fastest pace today since 2016, by far the weakest ever in history, versus the greenback. Can you give us a sense of just how prevalent the stress is on emerging markets as a result of the strong dollar?
Sure. So look, it's a sea of red out there across all currencies, developed and emerging, with the exception of obviously the yen and the Swiss franc. But what's interesting is that the euro is starting to kind of stabilize a little bit here this morning, and that's feeding into Central and Eastern Europe, some of the emerging market, the low yielders like Poland, the Czech krona, Romania, etc. But look, it's just really, really weak, and you're absolutely right about. Forget about Mexican peso. Look at Brazilian real. Look at Russian ruble. All of these currencies are getting hammered. And what's really concerning for me now is we've got a lot of central bank meetings, we've got a lot of stimulus that we're expecting, but as real rates, inflation adjusted nominal rates, dip into negative territory, this is reminiscent of what just went down with Argentina and Turkey, right? How can you be cutting rates when real rates are in negative territory? And so this is a real risk going forward. It's certainly one of those things that might prevent countries like Russia from cutting rates on Friday. We're going to see Brazil cut today, we're going to see a lot of central banks cut tomorrow. But after that, all bets are off. We need to see, I don't want to say helicopter money, but we need dollars, real dollars, to flow into these countries in order to alleviate the stress.
So, Damian, we're starting to get some fiscal stimulus from around the globe, led by the U.S., talking about a $1.2 trillion plan. What else do you think needs to happen? Do you think there needs to be more? Do you think it needs to be coming from other parts of the globe? What do you think the markets really are looking for right now?
It's not necessarily just the size. It's really the direction. It's really the mechanism for how that liquidity is reaching those who need it most. And so, look, what I'm watching right now is we're going to see ICI report money market fund assets today. They report every week. And so, I expect continued outflows from prime money market funds into government money market funds. And if you recall, and I hate to be a bearer of bad news, but back during the global financial crisis, it was that 62.6 billion reserve prime fund, which went wheels up. It broke the buck because of Lehman Brothers. Now, I'm not suggesting we're going to see another Lehman-type event, but it's these borrowers who have risky derivative exposure, risky MBS exposure, et cetera. Banks are just not lending to them, and the risk of us seeing a similar incident, it just rises by the day.
So, Damien, we talk about the liquidity issues that you raised at the beginning of this discussion. Didn't we learn this lesson back in 2008? And didn't, the rules change to ensure that there would, in fact, be liquidity?
Yeah, but the rules have changed in a way where it's really, they were not prepared. This is almost like, I have to quote Ira Jersey here, this is almost like a wartime scenario. This isn't, just some sort of a credit crunch that's kind of metastasizing. It's a function of the fact that really, what you're seeing is just real balance sheet stress, and the fact that, this volatility just won't allow risk takers to go in and fill the gaps. I'm going to take it to another level. All of these huge hedge funds, the Millenniums, the AQRs, the Two Sigmas of the world, the Bridgewaters, they may well be seeing redemptions from clients on the other side of this, further stressing, liquidity in the market because, these are the big borrowers, right? And that just kind of, it's just a spiraling impact. It's going to be very, very difficult to pinpoint exactly where the liquidity is needed most in the current environment, Paul. But, these are all things that we need to be looking at very, very closely, and I just don't think the banks are equipped to handle it.
All right, Damien. I want to take the positive angle here. Is there a possibility that everybody's working themselves into a frenzy? You're seeing some of these algorithmic strategies that weigh the traditional correlation between bonds and stocks getting blown up, and you're seeing them with have margin calls with respect to gold, and you're seeing that all play out now. Is there a possibility, with all of the money that governments are basically going to be putting into the economy, that there could be some sort of potential end to this, and that actually this will all reverse and be okay?
Yeah, sure. As soon as banks basically, as trading desks are back up and running on Wall Street, good luck waiting for that one. JP Morgan and Credit Suisse are sending traders home. This is...
I'm trying here, Damien. Come on, help me.
I know, me too. I'm looking for silver lining here, Lisa. I promise you. But, it's until trading desks are back up and running, until vols have come off, this is going to just persist. And the longer it does, the weaker these, corporate balance sheets become. It's really, really frightening from my perspective, And look, we could talk about, safe havens and places you want to hide out. But even some of them, the better safe havens like gold are not behaving properly because of all the margin calls that are coming through. It's a really, really difficult environment for portfolio managers, to say the least.
So, Damien, just, what are some of the data points that you're looking at right now to get a sense of, maybe trends and maybe where there might be some bottoming here? Is there any markets that you think we should be focusing on?
Well, there's really only one market that you can focus on, and it's cash. It's currencies, right? And look, you said it earlier on the episode. The Bloomberg Dollar Index is now 6.2% year to date. I never thought we were going to see. We saw that 8% year the year before. I never thought we would see anything like this. And this is just happening so fast, and it just shows that everyone has got nowhere to go but the dollar. Now, the one silver lining I will say is the fact that all of this negative yielding debt, is actually turning back into the positive, right? Yeah. So, one place a lot of investors were hoping would be the first to rally are, utility stocks and, places where you can get, large dividends and cash flow. Well, now that whole strategy's got turned on its head because you've got positive yielding bonds, globally again, right? So, it's just very, very difficult to pinpoint exactly who stands to benefit, and very easy to pinpoint who stands to lose from the current environment.
Yeah, Damien Sassower, thank you so much. I think that the makers of Xanax should do just great. Damien Sassower, who covers all things emerging markets for Bloomberg Intelligence, thank you so much for being with us. I do want to bring you this headline. President Trump tweeting, "We will be, by mutual consent, temporarily closing our northern border with Canada to non-essential traffic. Trade will not be affected." Details to follow. There we go with the closure of the border with Canada. And this comes as a growing number of countries try to isolate themselves from further spread of the coronavirus. Europe closing a lot of the borders there. We'll bring you more details as we get them. Right now, let's get the news. Michael Barr has that for us. Michael.
Paul, Lisa, New York Mayor Bill de Blasio says military assistance is needed in the city because of the coronavirus scare. Blasio says there are 923 confirmed cases in the city. Yesterday, de Blasio said he was thinking about shelter-in-place orders, but Governor Andrew Cuomo pushed back on that. Senate Majority Leader Mitch McConnell says Washington is trying to move at warp speed to bring relief and financial aid to those impacted by the coronavirus shutdown. The White House is putting together a plan to make direct payments to Americans. Checks could be in the range of $1,000. The hospitality industry was immediately rocked by decisions in major cities and states to limit restaurants and bars to takeout or delivery only. Bloomberg's Martin DeCarroll reports laid-off workers are now waiting for government relief.
As many as 7.5 million workers could be hurt by the effective closing of bars and restaurants in just the dozen or so states where the restrictions are in place right now, according to one estimate. New York hotel waiter Mark Desai is one of thousands who've already been laid off.
Uncertainty for everyone right now is completely unfathomable.
In D.C., the city's CFO says it's a looming disaster for workers and the Treasury.
14% of our employees, between 30 and 50% of our sales tax revenue.
The evaporation of tax revenue will sap the resources local governments have to help people who face weeks, if not months, of no income. In Washington, Martin DeCarroll, Bloomberg Radio.
Democratic presidential candidate Joe Biden won primaries in Florida, Illinois, and Arizona, giving him a huge boost in delegates as he battles Vermont Senator Bernie Sanders for the nomination. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Paul, Lisa?
Michael Barr, thank you so much. We appreciate that. Looking at the markets here, data check for you. S&P off about 4.9%. That's 125 points on the SPX. 2404 is your level there. The Dow off about 1,100 points, 5.1%. 2164 is your level on the Dow Jones Industrials. And NASDAQ off 4%, doing a little bit better than the other two indices, off 285 points. That's 7,046 on the NASDAQ. Looking at your treasuries here, the 10-year treasury, we are basically, kind of flat here. It's about yielding about 1.078% on the 10-year. The 2-year treasury is about 0.44%. And got to look at oil once again, falling out of bed completely. West Texas Intermediate crude down 10.7%. That's $2.88 a barrel to give us $24.07 a barrel WTI. This is Bloomberg.
This is a Bloomberg Pursuits look at luxury. Across the country, as restaurant patrons stay home, open table data shows business down 48% from the previous year. Dining Bonds is an initiative to support imperiled independent restaurants. The model is simple. A $100 bond will be sold for $75 and can be cashed in for full value after the redemption date. Meanwhile, unexpected sources are stepping in to fill the shortage of hand sanitizer. In France, luxury goods conglomerate LVMH is now using its perfume factories to make the product for hospitals. And in the U.S. and in the U.K., distilleries are doing their part to pitch in on the effort to slow the spread of COVID-19. Brooklyn's New York Distilling Company uses straight from the still overproofed Navy strength gin mixed with aloe, juniper, and citrus. And in Washington, Potomac Distillery uses coconut oil, tea tree extract, and the House 140 proof rum. I'm Andrew O'Day, Bloomberg Radio.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. Financial markets continue to spasm with U.S. stocks plunging toward levels that halt trading as the economic fallout from the pandemic outpaces the massive response from governments and central banks. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P 500 down 5.5%, down 139 points at 2390. Dow Jones Industrial Average down 5.6%. It's down 1,206 points at 20,045. Jumping around. Nasdaq's down 4.5%, down 334. It's at 7,000 even. The 10-year Treasury up 3/32, yield 1.06%. The yield on the 2-year 0.43%. NYMEX crude oil is down 11.25%, down $3.03 at $23.93 a barrel. COMEX gold down 1.25%, down $18. It's at $15.0720 an ounce. The euro 1.09 against the dollar. The yen is at 107.99. Paul and Lisa.
Karen, thank you so much for that. I am so excited to speak with our next guest, David Rubenstein, co-chair, co-founder of the Carlyle Group, also host of the David Rubenstein Show, peer-to-peer conversations. And we do want to get into his latest episode with Stephen Ross, who is the chair and founder of Related Companies. But before we do that, we really have to address what's going on currently in markets, David. Incredible turmoil, a lot of questions about small and mid-sized businesses and how we are going to get them through this period of time. And David, I want to start with your expertise working with private equity, private debt. How much do you think that whole complex is going to be involved in trying to bridge this gap for companies that might end up without the cash to cover themselves right now?
Well, obviously, the U.S. government has more resources than anybody else, and I expect the Congress will pass shortly legislation that will provide some relief to some of the industries that are in most trouble. The large private equity firms, which do control a lot of companies in the United States and around the world, all of them are working with their portfolio companies one by one to see what their needs are. Do they have cash? Do they have to have layoffs? Do they need additional support? So our company, as well as similar companies, are doing that. It's not a pretty picture today. The beginning of a further downward trend, nobody really knows. Nobody knows exactly how long it's going to take. But I do think that this is a very serious situation for, obviously, the economy and for the health of the American people and people around the world. So I don't have the answers. I wish I did.
One thing that we have heard from some funds, at least, I know from Howard Marks, for example, of Oak Tree Capital, in an interview yesterday, he was saying that he's actually raising money for a fund to invest in distressed debt through this cycle. And some people are saying, well, it's actually a time to be lending at higher rates, but trying to get out there since valuations have been adjusted so much. Do you think that this will emerge and end up being an opportunity for investors?
The most important thing is to worry about people's health. I think making money is by far a subsidiary goal of anybody's existence right now. So I am focused on the health of our employees, the health of our companies, and not so much making money by buying things at distress. That's just not my predisposition at the moment.
Fair enough. And just taking a broader view of the volatility, are you hopeful that it will subside? I mean, is your sense, based on your experience with some smaller businesses, that we will emerge well on the other side and have a pretty fast recovery?
The world has never seen anything quite like this. And so nobody really knows. People can speculate, but nobody really knows. I'm hopeful that within 45 days, 60 days, the worst will have occurred in terms of the health epidemic, and then we can begin to rebuild the economy. But it's going to take a while. It's going to take a while before we actually can know exactly how bad the health problem is. And again, that's the biggest problem. You can always make more money if you're inclined to make more money. You can always invest. That'll go on for hundreds and thousands of years. But saving the lives of people who are at risk now, that's to be the most important thing that everybody, business people and everybody else, cares about.
So, David, just give us, it seems like the central governments around the world are really starting to get aggressive on fiscal stimulus. Give us your thoughts on kind of what you've heard and seen over the last couple of days and what you think might be, needed going forward.
Well, remember, Tony Fauci said recently, in talking about the health problem, that whatever you think you need, wherever you think you are, it's actually probably worse. Well, that's probably true in the economy right now as well. Whatever amount we think we need, we might need more. So obviously $1 trillion to inject into the U.S. economy is a lot of money, but whether that's adequate, we don't know yet. It may take more than that. I'm heartened by the fact that I think the government is going to do something, but we have to worry about the people, not like me, but the people who are going to be unemployed, the people that are going to be laid off, the people that can't meet their daily needs. So that's the biggest problem. I hope the government will move quickly. In terms of how long this is going to go on for, no one really knows. I suspect 3, 4, 5 months from now, we'll see the economy come back. What kind of bounce back it is, nobody really knows. It's just going to take some time. Now, we do see in China that there is a bounce back now. I think China is beginning to go back and have an economy. It's going to take a while for companies to go back to the values they had before, but you are seeing economic life. So I don't think this is the end of civilization as we know it, but we've never seen anything before where you've had an economic collapse as well as a healthcare scare that is so significant. So it's something that everybody has to take seriously.
Meanwhile, while everybody, David, is home trying to socially distance themselves from the rest of the world, they do need to be entertained and informed. And you did record an interview before the coronavirus really spread to the United States in a significant way with Stephen Ross, Related Companies chair and founder. And what were sort of some of the interesting takeaways from that interview?
Again, I hope everybody has a chance to watch it, but of course the more important things are worrying about their health and other things. But if you do have a chance to watch it, this is the most important things that he was saying. He came from, I would say, a modest background. His father was an inventor. He went to college, went to law school, thought he would go into the financial world and got fired by Bear Stearns. So he's out of work in New York, didn't want to move back to Detroit where his family was. So his mother lent him $10,000 and he started a company called Related. That is now the largest real estate developer in the United States. And it has ongoing the largest single real estate project in the United States, the Hudson Yards project in New York City. He's become extremely wealthy, but also very philanthropic. He signed the Giving Pledge. He's giving away enormous amounts of money to education, cancer research. And on the side, he owns a little thing called the Miami Dolphins, a football team that he bought for about $1.1 billion. It's probably worth 3 or 4 times that now. At least it was before the corona crisis. And I don't know what anything is really worth anymore today. But he's a man who is he's 79 years old and recognizes that he's probably lived more than he's going to live. So he's trying to give away money now and do things that he thinks are useful for society. A very admirable person.
David Rubenstein, thank you so much for being with us. Please stay healthy through this whole affair. David Rubenstein, co-chair and co-founder of the Carlyle Group, also the host of the David Rubenstein Show, peer-to-peer conversations with Stephen Ross, Related Companies chair and founder. And that is something that you definitely shouldn't miss. It airs on 9 p.m. New York time tonight. Also, that would be 6 p.m. Thursday in Dubai, 7 p.m. Thursday in London and Hong Kong. Right now, looking at the markets, it's amazing, Paul. I'm seeing the S&P down 4.1%. And I'm just thinking to myself, well, we've seen worse. We've seen worse recently. It's not that volatile today. I'm Lisa Bromwoods with Paul Sweeney. This is Bloomberg Surveillance.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Leave it to the New York Times to make the most intelligent pop music podcast out there.
Welcome to the New York Times Popcast.
On the Popcast, the Times music staff gets together for a weekly roundtable on the hottest topics in popular music. From award show autopsies and reactions to new releases to difficult-to-process scandals and emerging themes in the music landscape, hear distinguished music critics share their perspectives on the latest music news, songs, albums, and artists of note on the New York Times Popcast. Search and favorite Popcast to join the conversation.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Vattel Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology and as an adjunct professor is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the city on the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that? So in 10 years, we're actually ready to take on those challenges when we have our first development in the water. NJIT also has been doing a lot of work in self-healing materials, so taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is a Bloomberg Money Minute. The opening bell rang and stocks immediately fell, with the rally from yesterday in the rearview mirror. Despite promises of a big stimulus package in the works from Washington, D.C. to combat the economic impact of the coronavirus, it's the not knowing that has traders worried. One market strategist says it's not like anything else they've seen before because of the unknown length and the implications of the situation. And crude oil continues to slide. It's below $25 a barrel for the first time in almost 2 decades. JetBlue's average daily sales have plummeted 82% this month as the spread of the coronavirus has decimated travel demand. Hilton plans to close most of its hotels in major U.S. cities and has already started to close namesake properties in New York and Washington. Meanwhile, Marriott has begun to furlough hotel staff in an effort that could affect tens of thousands of employees. Once again, a lower open for Wall Street this morning. Gina Cervetti, Bloomberg Radio.
They don't just talk to the most important people.
Can you give us your broad sense of the main driver behind the latest weakness?
They talk with the most interesting people.
When you talk to your clients, are they taking this seriously?
Lisa Abramowitz.
What's going to be the main driver of growth?
Paul Sweeney.
What did you take away from those Amazon numbers last night?
Bloomberg Markets.
Is it as ominous this time around?
Weekday mornings at 10 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Is there any bank right now in the U.S. that you think is a buy?
Do you think Chairman Powell has lost the market?
Jeff Bezos is no dope. What's the big ka-ching?
The big question, I think, for investors is free cash flow.
Breaking market news and insight from Bloomberg experts.
The U.S. tariffs actually hurt both China and the U.S.
Large strategics are looking to either buy or invest in innovation.
Soybeans and corn have been basically at or below the cost of production for about 4 or 5 years.
Will we see more bonds, more yield? This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Good morning. Coming up on Bloomberg Markets, we've got more volatility, with volatility rising to the highest on record as stocks slump. We'll take a look at what's going on, including the lack of liquidity in U.S. Treasuries. Right now, though, let's head over to John Tucker and get some numbers. John.
All right. Thanks a lot, Lisa. Yeah, remember the everything rally? Well, where do you put your money now? Looks like dollar remains king. We have equities right now selling off, but off the worst levels of the session. The cash open only about 30 minutes into it. NASDAQ Composite Index 3% lower, down 244 points right now. The S&P 500 That's down 104 points. That's a 4% decline. Remember, earlier today, in the futures market, we were limit down. The Dow Jones Industrial Average right now down 969 points. That's down 4.6%. Now, as you look at treasuries, they are steady after the biggest yield jump we had since 1982. Also, markets bracing for the potential flood of spending, so that explains a part of the story with the bond sell-off that we had seen. And the dollar strengthening for a seventh straight day. The pound hitting its lowest level against the greenback since 1985. A 10-year yield right now, 1.04%, as we have a bit of a bid to the long bond. 2-year right now at 0.42%, and the 30-year, the long bond, 1.64% is the yield right now. We continue to see the sell-off in crude oil. Brent crude, this is the international benchmark, $27.03 a barrel right now. That's down almost 6%. NYMEX crude is below 25 a barrel, $24.36 right now. That is down 9.7%. And we check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. We're brought to you by New Jersey Institute of Technology, ranked #1 in the nation for student upward economic mobility. Learn more at njit.edu. Lisa and Paul.
John Tucker, thank you so much. We are seeing declines, although off earlier lows. We're actually only down 3.8% for the S&P. NASDAQ down less than 3% for a second there. So we seem to be having a little bit less volatility compared to the previous couple of days where it's limit up, limit down, limit up, limit down. Dave Wilson, Bloomberg Stocks Editor, here with us, tracking all the moves. You've been really focusing on the airline stocks as well as the financial stocks, the cruise line stocks. A lot of red out there.
Oh, absolutely. I'll tell you, though, I was waiting for a 7% drop in early trading that would have tripped the circuit breaker, as has happened 3 times since the beginning of last week, and it didn't come. So, that's at least something to show you that it's not as extreme now as it has been. That said, you're talking about all 11 of the main industry groups in the S&P 500 being lower. Energy stocks, no surprise, the worst performers, given what we're seeing in crude, but industrial companies as well. And a lot of that is Boeing, given that they're asking for $60 billion in financial aid of one form or another, not only for themselves, but also for their suppliers, in light of what's happening to the aerospace industry with, airlines not flying the way that they have been. United cutting its April schedule, just to give you sort of one reference point, by 60% for April. That just goes to show you, what's happening to Boeing's customers. And of course, this is on top of the issues they've had with the 737 MAX jets. So, they're really kind of back on their heels at this point. And it largely explains, why the industrial stocks, which include, General Electric and United Technologies, a couple of Boeing's biggest suppliers, why they're getting especially hard hit here.
So, Dave, looking at the S&P down 3%, a little bit of a silver lining. It could have been worse as we're looking at the futures earlier today. Give us a sense of kind of volumes being traded in the marketplace. A lot of people will look at, excess volume, heavier than usual volume to be a healthy sign that maybe markets are kind of, punching themselves out.
Well, let's take a quick look at the volume in shares of companies listed either on the New York Stock Exchange or on the NASDAQ. We have an index on the Bloomberg terminal that tracks this. You had about 1.9 billion shares traded in the first half hour today. And that's even more than we saw yesterday. That's up about 10%. So, to the extent that we're seeing a pickup in volume, you can argue that maybe people are more inclined, given the way that stocks have tumbled in the last few weeks, to take advantage of lower prices here. There's certainly sort of a sentiment among some investors anyway that this is a great time to buy, given how much stocks have fallen.
So punch themselves out. Is that a technical term, Paul?
That's a CFA level 3 for Tom Keene.
I will say the other thing that's kind of interesting is you're actually seeing yields come lower today, actually, which earlier they'd been higher, and they're actually coming in, price up, yield lower. And this may be comforting to some people because bonds are behaving a little bit more in the traditional relationship with stocks. There was a concern earlier this morning that there was a sell everything, liquidate everything, just get your dollars and go put them in your mattress kind of mentality. It seems like we're shifting away from that a little bit.
A little bit. I mean, you see utility stocks. I mean, when you talk about interest rates and the kinds of securities you buy to take advantage of the income, they're falling in line with the market at this point. You know, and one thing that was interesting, you saw the S&P 500 Utilities Index, the other day at a yield of almost 4%, and that was the highest we'd seen in 4 years for that indicator. So, it kind of fits with the idea that, at least yesterday, people were buying utility stocks for their income. Maybe today they're shifting to treasuries and other debt here.
So, Dave, we've seen this collapse in oil, WTI down again significantly today. We haven't really heard anything from the Saudis or the Russians that maybe they've had enough that one's going to blink. We haven't really seen that, and it's just extraordinary, isn't it?
Well, it certainly is. I mean, given the magnitude of the drop in oil prices, you'd think that somebody would want to kind of reshuffle the deck, if nothing else. And it hasn't happened. And just taking a look at the S&P 500 energy stocks, on an individual basis, all 27 of them in the S&P 500 are lower. I mean, you're seeing declines of 10% or more in a bunch of those shares. The pipeline companies, notably Williams and Kinder Morgan, I mean, they're the ones that just transfer the oil and the natural gas that's being produced in the shale fields and elsewhere. So, it goes to show you that what's happening in the oil markets is certainly rolling stocks. I will say, though, ExxonMobil is only down 1%, which on a day like today is actually not bad.
Well, how did their bond sale go yesterday? I have to go check that out. But while I check that out, I will just say, if we talk oil, punch themselves out, that pretty much sums up what's going on in oil. And I would say, Paul,
yeah.
When are oil majors going to punch themselves out with production when they run out of place to actually put the oil, which is actually evidently a thing now?
Yeah, because we saw in the last couple of weeks that some of the oil tanker stocks were rallying, and it was the anticipation that producers would store the oil offshore and wait for higher prices. So, yeah, that's definitely part of the mix. And we should point out ConocoPhillips cutting their capital exploration budget, CapEx, and also their plans for stock buybacks. It's amazing to think that companies are actually buying back stock, given how back on their heels many of them are. But of course, you're talking about much lower prices here. So.
That makes more sense than buying them at their peaks, frankly. Paul, I will bring this to you. Exxon did sell $8.5 billion of debt yesterday. They boosted their debt by 17% that day.
Wow. Okay. So that market was open yesterday.
It was open to Exxon, who was just downgraded. But, hey, they got their money.
Well, what was interesting is that the yields were higher than on Verizon's bonds. And Verizon, is a whole lot lower in the credit rating scale than Exxon is.
Bloomberg Stocks editor Dave Wilson, thanks so much for joining us. We appreciate that. Looking at the futures here, down the cash markets, we are open down 3.8% on the S&P. Right now, let's head down to our 99.1 studios in Washington, D.C. to Nathan Hager for world and national headlines. Nathan.
Paul, thank you. The U.S. and Canada are closing their border to non-essential travel as both countries try to contain the coronavirus. President Trump made that announcement on Twitter moments ago. He says it's a temporary move and won't affect trade. Sources tell Bloomberg this indefinite ban on leisure travel between the U.S. and Canada will have wide exemptions for business and commerce. All this as the number of cases around the world tops 200,000, according to a Johns Hopkins University tally. In New York City, Mayor Bill de Blasio says there are close to 1,000 infections. He is calling for military assistance after raising the idea yesterday of a citywide shelter-in-place order.
I'm hearing constantly from people who are tremendously worried about how they're going to make ends meet. In that scenario, a shelter in place begs a lot of questions.
Governor Andrew Cuomo says only he has the authority to impose that kind of order, and he's not inclined to do so. President Trump says he will hold a news conference today on what he calls very important news from the FDA on the coronavirus. We could get details on all of this then. Joe Biden is a step closer to sewing up the Democratic presidential nomination. He swept yesterday's primaries in Florida, Arizona, and Illinois, and gave his victory speech from his home in Wilmington, Delaware, due to the coronavirus.
Tackling this pandemic is a national emergency, akin to fighting a war. It's going to require leadership and cooperation from every level of government. And it's going to require us to move thoughtfully and decisively to quickly address both the public health crisis as well as the economic crisis.
Global news on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Revisions, return policies. There are so many ways to redo a decision.
What are the ramifications if she crumbles or doesn't crumble?
Do they have any path other than the courts?
Except here, we have to get it right the first time.
We always talk about the losers in a trade war. Are there winners?
So that you can too.
How does your modeling have to pivot to reflect a different scenario?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening.
1 in 3 adults has prediabetes. 1 in 3. That means it could be you, your football buddy, your football buddy, or you, your best man, your worst man, you, your dog walker, your cat jogger. While 1 in 3 adults has prediabetes, with early diagnosis, prediabetes can be reversed. Take the risk test at doihaveprediabetes.org. Brought to you by the Ad Council and its Prediabetes Awareness Partners.
What if you could keep the top economic experts in a conference room next to your office without having to feed them?
Do we need better optics? Do we need some substance? Do CEOs care about ESG?
We have seen quite a lot of stimulus pumped into the system already.
It's the biggest warning yet about the financial risks of climate change.
Now there are more ways to hear us. Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and at BloombergRadio.com. Bloomberg, the world is listening.
Listen, as a hiring manager, I've got to tell you, the best job candidate isn't always the typical candidate. Sometimes they're a grad of life.
Meet the grads of life. Young adults of unique determination and experience. An ideal fit for your company in an entry-level position, internship, or mentorship. They might not have every qualification you typically look for, but they're exactly who your company needs.
Sometimes the best candidates aren't the ones you're used to.
Go to gradsoflife.org to learn how to find, cultivate, and train this great pool of untapped talent. Brought to you by the Ad Council and Grad...
This week's On the Media, the president thought he could defeat the narrative of COVID-19 with his usual tactic of, quote, censorship through noise. But the virus is proving resistant.
People's lives are going to be disrupted on a daily basis, and as that happens, the alternate reality he's created is inevitably going to implode.
Catch On the Media from WNYC. Listen to the On the Media podcast from WNYC Studios on TuneIn today.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Imagine being fired because of who you love. Imagine being denied medical treatment because of who you marry. Imagine being evicted because of who you are. Millions of Americans don't have to imagine this. They have to live it. Because in 31 states, it's legal to discriminate against LGBT people. Get the facts at beyondido.org. Brought to you by the Gill Foundation and the Ad Council.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it. But I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President, Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. This on a day when the major averages are lower, but maybe some signs of relief here. After being limit down in the futures market earlier today, right now the Dow Jones Industrial Average down to 851 points. That's a decline of 4%, and it's off the worst level of the session. The S&P 500 is down right now 93 points. That's a decline of 3.7%. The Nasdaq Composite Index is down about 2.9%, down 211 points. And there is some green on the screen. If you go dive into the broader market, Amazon.com, those shares up about 1%. Walmart shares, they're up about 4% right now. And Netflix, if you're home watching TV, up 2% right now. We're also seeing some stability in treasuries. They're steady right now after we had the biggest yield jump since 1982. The 10-year is got a bid up 6/32 right now. That's got the yield down to 1.04%. Now, not getting any relief in the crude oil market. NYMEX crude below $25 a barrel. That is a 10% decline in today's trading. Right now at $24.23. We check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Lisa and Paul.
Thank you so much, John. And just to add to that, we are also seeing the high-yield bond ETF down 2.6%, so almost as much as the NASDAQ at one point. Bloomberg Markets is brought to you by Commonwealth Financial Network. For the sixth straight time, J.D. Power ranks Commonwealth #1 in independent advisor satisfaction among financial investment firms. Visit Commonwealth.com to learn more. Really, the focus has been on the Treasury market, in particular the wild swings that we've been seeing in yields. So there's no one better to talk to us about that than Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. Ira, I want to start with the unprecedented move in 30-year Treasury yields yesterday. What was your interpretation of that?
Well, it's all about liquidity. The Treasury market, Lisa, has been incredibly illiquid the last couple of months. I mean, you look at right now, the market would move, quite substantially, even on a $5 million trade, which is for the Treasury market a very small trade. And liquidity has not been this bad. Let me say this: liquidity was not this bad in 2007 and 2008. So I think the question that we need to ask ourselves is why.
Well, hold on one second. What do you mean by liquidity? Because liquidity can refer to price swings.
I mean the ability to sell securities in size without significantly moving the price. So I'm not talking about liquidity like central bank liquidity, where central banks are adding reserves, right? So that's central banking liquidity. That's the stuff you learn in college. Liquidity in the market is like, let's imagine you have an $8 billion book and you want to do a trade of $50 million in treasuries. Now, 2 weeks ago, you could do that trade without moving the market. You could just do that trade. There was an offer on the screen, and you could sell $50 million right there. Today, you would move the market very substantially if you tried to sell $50 million right here, right now. And that's one of the reasons why you've had these massive swings. So even though, the news yesterday was obviously good, you had, fiscal stimulus coming from the U.S., Europe's talking about it as well, so people were optimistic. But realistically, that probably should have only been worth 10 or 15 basis points to 10-year treasuries. Instead, you get a 35 basis point sell-off, and that's because there wasn't any liquidity. So you get, everyone's trying to funnel everything through a small door, and in order to get through that door, you have to basically pay a higher and higher price.
So, Ira, what happened to the liquidity? I thought this was an issue that reared its ugly head back in the financial crisis, and there was commitments to, improve that going forward. What happened? What's going on now?
Well, so during the financial crisis, we weren't really worried about. We were worried about bank funding, right? So funding is different than risk taking, and so banks and insurance. And Paul, I talked to some of your old colleagues in Bloomberg Intelligence on the banking side yesterday. And one of the things that we all agree on is banks are reasonably well funded. Yes, there's some hiccups in the repo market, but those are mainly taken care of now by the Federal Reserve with all the operations they're doing. The issue is risk taking. There's no real backstop and people willing to take risk because you have to stay within certain capital ratios. You can't increase your balance sheet of your dealer or your bank significantly now because of these rules, because you're going to break some liquidity covenant or you're going to break some capital ratio, and you don't want to do that. And because you can't do that, because the regulators would theoretically come down on you, you're not willing to take any risk. And then the risk managers come in and say, don't take any risk, don't buy high yield bonds, don't buy corporates, even if you think that they'll be money good and the price is right, because we don't want that risk. We don't want to risk a 2007 or 2008. So basically, no one's willing to take that risk. So this is, when I say liquidity, I mean the ability to sell risk somewhere in the market without moving the price very much. And we're not there. This is way different than 07 and 08.
Here's what I'm struggling to understand. I get that with high yield bonds, even with investment grade bonds, certainly with stocks. But what about treasuries? That's not risky debt.
Well, you say it's not risky debt, except that on a 30-year, for example, let's say that 30-year debt, excuse me, let's say that 30-year debt were to sell off 50 basis points from here.
Don't go Corona on us, by the way.
No, it was some water going down the wrong way. But let's say that 30-year Treasury sold off from 1.6% where they are today to 2.1% where they were just 2 weeks ago. If you bought them here, right, so if you were a trading desk and you bought them here, you would lose 15% of that investment, right? So even though, Treasury's not going to default on its debt, right? I don't think that's in the cards at all. And even with an extra $2 trillion of Treasury is going to be issued over the next 2 years, will it be? But the fact is that there's a lot of interest rate risk, particularly in those 30-year and even 10-year securities, right? So the fact that you have all that interest rate risk means, you don't want to take on the extra load on your balance sheet.
Yep, that's a liquidity crisis. Ira Jersey, thank you so much. We appreciate that. Ira Jersey is the chief U.S. interest rate strategist for Bloomberg Intelligence, joining us on the phone. Talking about the liquidity in the Treasury market, typically not an issue for that market, but as Ira was suggesting to us, that really has been over the last couple of weeks, and most notably yesterday. Looking at the futures, cash equity markets, Lisa, we are down 4.4% on the S&P, trying to hold in there. Dow down 4.8%, NASDAQ down 3.6%, so a little bit weaker, but trying to hold on here to some of these, less than worst case scenarios that we've seen in the equity markets. This is Bloomberg.
This is a Bloomberg Money Minute. Another ugly start to Wall Street's day, with investors walking back losses that had started at around 4%, and now the Dow down 841, the NASDAQ 172, the S&P 82. The economic fallout from the coronavirus is outpacing government's efforts to try to help stem economic effects. Janice Henderson, money manager, says the only path to recovery now is evidence that virus infection rates are peaking, and we're not seeing that. Crude oil futures are trading at $24.26 a barrel, and that is an improvement. They had fallen below $24, which is an 18-year low, on Saudi Arabia promising now to keep production levels high for several months, flooding the markets with crude when demand has collapsed. The virus, however, is sparking some ingenuity. Hospital workers in Washington state, for instance, MacGyvering things like face shields with supplies from craft stores and Home Depot. I'm Joan Doniger, Bloomberg Radio.
The possibility of lung cancer can be pretty scary, especially if you're one of approximately 8 million current or former smokers at high risk. That's why SaveByTheScan.org wants you to know that now there's a breakthrough low-dose CT scan that can detect lung cancer early, and it only takes 60 seconds. You stop smoking, now start screening. For an easy quiz to see if you're eligible, visit SaveByTheScan.org. It could save your life. SaveByTheScan.org is brought to you by the American Lung Association's Lung Force Initiative and the Ad Council.
The market's in focus every business day. The P&L Podcast with Paul Sweeney and Lisa Abramowitz.
Are there some sectors that you want to have more or less exposure to?
What's behind this engine of gains?
Analysis of the day's Wall Street action.
The U.S. market looks relatively safe.
From Bloomberg Intelligence, Bloomberg Opinion, and influential newsmakers.
Ward McCarthy joins us right now.
P&L with Paul Sweeney and Lisa Abramowitz. Listen today on Bloomberg.com, the Bloomberg Business app, or subscribe on Apple Podcasts.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
We operate. Your response is critical to our response in places where few others will go. That's where we operate. Learn more at doctorswithoutborders.org.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Why is delivering the best client experience a top priority at BNY Mellon's Pershing? Michelle Feinstein, Director of Client Engagement, explains.
Today's investors want a financial relationship that's on demand, customized, and leverages the latest digital technology. At BNY Mellon's Pershing, helping advisory firms and broker-dealers create great experiences for their clients is our priority. Through our integrated wealth experience, we give you a high-touch service, flexible technology choices, and expert insights, so you can deliver a highly personalized experience to your clients at every step, from onboarding to wealth planning, to performance analysis and more. And because we're part of BNY Mellon, you'll benefit from more than 230 years of strength and stability. At Pershing, we're personally invested in your success.
Visit Pershing.com to learn more about Pershing's integrated wealth experience. Pershing LLC and Pershing Advisor Solutions LLC are both members of FINRA and SIPC.
Tom has been a teacher for over 40 years. One day, I think one of the students had asked the question and he didn't remember the answer. And I also noticed that he was letting his class out earlier than they were supposed to let out. I was really starting to worry.
Levi and I talked about how it would change our lives, but he was there beside me.
When something feels different, it could be Alzheimer's. Now is the time to talk. Visit alz.org/ourstories to learn more. A message from the Alzheimer's Association and the Ad Council.
Sometimes the simplest method is the best one.
I think even I could figure it out today.
Balance of Power with David Weston.
You had a high estimate. It beat your high estimate.
Weekdays at noon Eastern on Bloomberg Radio. Bloomberg, the world is listening. Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
Coming up here on Bloomberg Markets, we're going to talk about President Trump closing the northern border with Canada. Also talk about the stimulus package currently being discussed in Washington Hill. Meanwhile, we're also going to be talking about the Treasury market and the lack of liquidity that Ira Jersey was just talking about. Right now, though, let's get some numbers. John Tucker has that for us with the Bloomberg Business Flash. John.
Yeah, good morning to you, Lisa. From funding stresses to headaches about trading from home, the list of worries for Wall Street is pretty long right now. Stocks are down today. The major averages all in the red after a limit down in the futures market earlier today. But you know what? We're off the worst levels of the session. S&P 500 down to 3.6% right now, 94 points lower. The Dow's 4% lower, down 918 points. NASDAQ Composite Index down right now 2.9%, 212 point decline right now. Some of the biggest action, more eye-catching moves taking place in the bond market after the biggest yield jump for the 10-year bond since 1982, the U.S. Treasury, that is, and since 1982. Today, we're getting a bid to the benchmark of 15.30 seconds right now, so that's got the yield down to 1.01%. Treasury Secretary Steve Mnuchin issuing a dire warning to Senate Republicans about the potential impact of coronavirus on the labor market. Vinny Del Giudice says more on that.
Mnuchin used a political crowbar to move members of his own party to back an economic rescue plan. Bloomberg News is reporting the Treasury Secretary raised the possibility U.S. unemployment could hit 20% without government aid, double the last recession. Now, the Treasury says Mnuchin did use some mathematical examples to make his case, but never implied 20% unemployment would be the case. Vinny Del Giudice, Bloomberg Radio.
All right, we have to focus on crude oil inventories rising 1.95 million barrels, according to the EIA. Giving just not much of a lift at all to the crude market. NYMEX crude right now well below 25 at 23.87. That is extending its drop today, down 11%. And we check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Lisa and Paul.
John Tucker, thanks so much. We appreciate that. Well, in the never-ending news cycle that we seem to be in, some more big news this morning. President Trump saying that the U.S. and Canada will mutually close the border after the virus spread. To get a sense of what this means and what else is going on in Washington and in the White House, we turn to John Wingrove. John's Bloomberg White House reporter. joining us on the phone. John, thanks so much. Give us kind of what the latest reporting is about the U.S.-Canada border closing.
Well, yeah, and I'm Canadian, so I'm I'm at the nexus of this one. So the latest is Trudeau has been taking, believe it or not, stronger measures than Trump to close the border. And there was talk in Canada a couple of days ago saying, look, it seems like Trudeau wants to close the border, but Trump would get real ticked off and maybe close it to trade in retaliation. So it seems like Trudeau is getting what he wants, which is essentially a ban on vacations and tourism and leisure travel between the countries, whereas business travel and certainly the trade of goods would ostensibly go, unaffected. Many question marks remain. We have no idea when this would take effect. We don't know what counts as business travel. We don't know what visa classes would still be permitted or would still not be permitted. This is an indefinite move, so of course we don't know when it will end. That would be subject to the virus. But, this is a massive border that, before 9/11, many folks could cross even without a passport, and now we're in a situation where they can't cross it at all. What that effect is, I don't know. I mean, how many people are really still going on vacation in this current era? But, it's still nonetheless a big move.
There's a question just about the state of play of all the borders that have closed so far. Can you just bring us up to speed what we know as far as what type of restrictions there currently are with the U.S. and other countries? I mean, you talk about how people don't really want to go on vacation. Certainly people have been trying to come back from vacation in order to hunker down and what is it? Shelter in place?
Self-isolate. Everyone should
socially distance, self-isolate, right. Shelter in place. Fun times. #2020.
Yeah, right now it depends on where you're going and where you're coming back to. The biggest restrictions that Trump has put in on China and then later Europe, if you've been in any one of a certain number of European countries, he added the UK most recently. If you're a foreign national who's been in those countries, you're not allowed in the U.S. at all. But if you're an American, you can come back, but they're going to ask you to self-isolate for 14 days. Whereas other countries, they're not making that request at all. And there's been reporting that Trump is looking at somehow further restricting the southern border with Mexico and, warning that there might be some sort of, spike of folks fleeing the virus, although Mexico frankly doesn't seem to be having as widespread problems as the States does right now. So I think that would be an open question as to whether that's legit. But he is looking to close borders. I mean, this is this guy's reflex move for sure. I mean, he believes that the American borders are too open and, not an issue has gone by that he has not used as an opportunity to look at further restrictions, and the coronavirus is no different.
Hey, Josh, it appears to a lot of observers that the President Trump and the White House, the tone towards the coronavirus took a big turn several days ago, even though the White House is suggesting that was not the case. It was more of an evolutionary type thing. What is the feeling inside the Beltway as to what really turned the White House to say, boy, we've got a big problem here?
There's a couple of theories. One is that they got some data from the UK about a model. They talked about getting a new model over the weekend that basically scared them a little bit. But the tone absolutely changed. I know Trump is denying that it is, but their tone changed, and their tone changed on Monday, and now they're taking it really seriously. Remember, it wasn't too long ago that Trump wanted $2.5 billion for coronavirus response, and now is seeking $1 trillion for coronavirus response. So, just give you a sense, $2 billion to $1 trillion. That's how much their tone has changed. And here in D.C., it's like a ghost town, and so we've got the Senate still meeting, trying to figure out what they're going to do. Are they going to pass the House bill? Are they going to expand the House bill? We don't know the timeline on that. Senators, frankly, that group includes a bunch of older folks who are not social distancing while they're doing this. So there's urgency to this issue, and I think the Senate realized that. I think all of Washington realizes that. We're not seeing a lot of bipartisan divide on this issue.
Yeah, and it's definitely like a ghost town here as well. Josh Wingrove, please stay safe. Thank you for being